We are indeed thankful to them. This is before it's a momentous occasion for us as we celebrate our Golden Jubilee webinar. As an innovative idea, we decided to invite all our learned speakers in the 49th webinar hosted by us to share their suggestions and idea on their respective area of expertise in a crisp manner. Nirbhar Bharat, and have as many suggestions as possible to make vibrant, self-reliant India. Our objective is to collect all suggestions and share with the concerned authorities, regulators, and corporate. This is a Herculean task, but we took this challenge. As you will see, 70 senior industry leaders and experts, each one of them being who's a who in their respective field addressing us today. Friends, our chief guest of honor, and speaker are so widely acclaimed and admired personality that they do not require any formal introduction. And to save our time, we have already shared their brief profile along with the mail to all participants. I extend a hearty welcome to all the dignitaries for the inaugural session. Our chief guest, Dr. M.S. Sahu, Chairman, IBBI, and our guest of honor, Mr. M. Damodaran, ex-Chairman, SEBI, Mr. Anurag Goel, ex-Secretary, NSA, Mr. R.N. Das, ex-Chairman, PMLA and Benami Law Tribunal, Mr. Amit Mohan Govil, Principal Commissioner, ex-Policy Research, Mr. Pawan Kumar, Deputy MD, IIFCL Projects Limited, Mr. Gyaneshwar Kumar Singh, Joint Secretary, NCA, Mr. Manoj Pandey, Joint Secretary, NCA, Mr. Mark Jaila, Chairman, Standard Review Board, IVSC, USA, Mr. Sailesh Haribhakti, Chairman, Sailesh Haribhakti Group, Mr. Anil Ketan, former President of PSG Chamber, Mr. Ashok Kumar Agrawal, Chairman, Globe Capital Limited. We all also have the privilege to have with us Mr. V.S. Sundaresan, Executive Director, SEBI, and Mr. Ashish Kumar Chauhan, MD and CEO, BSC Limited, during the validity session. Honorable sirs, it is indeed matter of proud for us to have you with us today. I will move to take you through our journey of these 49 webinars in last 1 year. Let's show the. Sir, I'm just showing that what we have done in last 49 webinar in a very crisp manner. Sir, our CP philosophy was knowledge is an integral part of any organization, and corporate professionals embrace the notion that to operate effectively, it is necessary to become knowledge-based organization. And we believe the how to encourage research in the professional arena and to share and disseminate knowledge. Sir, we are doing every time we are sending CP shorts, CP newswire on and various connect knowledge base, CP short and CP connect. Our next is we have a app Companies Act which we are launching today, which is a complete book in itself that is there. Then we have our publication. These Companies Act publication are best-selling publication, Companies Act, Bankruptcy Law, and Valuation Business, which is continuously we are publishing and updating, sir. And our knowledge share, we have organized these last 1 year, the 49 webinars on various topics. This was our first webinar on 28/4. We organized on legal, regulatory, and compliance challenge in COVID era, and we have a question answer session. We organized 49 webinars on company law, security law, insolvency, taxation, labor, valuation, corporate governance, social issue, and deals that we have done. And our basic initiative was to question answer session to answer queries and demystifying law. Then COVID related regulatory relaxation and their implication because so many law has come that time. And then new knowledge area like gift city, Benami law, and etc. we have given to the industry. Capital market development and opportunities and what are the new changes are taking place. Topics on investor protection, innovative area like succession planning that we have done. And now if you see our statistical data on CP webinar, the total number of 58,000 people registered with our webinar, around average 1,184 average registration per webinar. And the majority 5 top webinar which was there were 2,000, 1,500 people joined, and they have participated in 2 programs, and we have received so many questions. 252 questions came in one webinar, and 212 questions came on labor law webinar, which we answered all questions in the session. Then 92 speakers attended these programs, which we organized last year. And these are the 5 top speakers who has addressed maximum number of webinars. Savitri is here, GP Madan, Narayan Shankar, Sudhakar, and Geetka. Those who have addressed, Savitri is the leader in this. She has organized maximum number of programs. And these are the people which we want to acknowledge, that these are the 5 participants who attended maximum 39 webinars from Bombay: Mr. Pankaj, Mr. Satyanar Aladi from Hyderabad, Dilip Kulkarni from Mumbai, Lalit Sharma from Mumbai. They have attended 39 to 34 programs in a time. Then we did a survey also, sir. And in the survey, we asked the people that timing is good. We asked them whether you got what is the ranking of CP webinar in this. So we asked them from 1 to 5. They have given this number to us, that your webinar's performance is out of 5 to this. And then we have asked coverage wise, presence wise, knowledge wise, question answer wise, how much you are thinking it is updated. So this is a survey which has come. This is the outcome of the webinar, which is, we are proudly saying that we have educated and disseminate the information and update the knowledge. We have cleared the doubt of participants on various issues and other industries. Then we have connected the regulator with the audience, because we invited regulator and discussed, deliberate discussion papers and give feedback. Whatever SEBI and ministry has come out with some paper, we have discussed and gave the suggestions. We have sharing suggestion with government and regulator on various issues. Proactively we have done, and we have tried to do the governance program where we invited the best faculty of India, and then we have done the follow proactive approach, that what is new happening, and on that basis we have done this type of work. Now the outcome of this program, these webinars, sir, the corporate social responsibility, we organized program and suggested, then gave the ministry. SEBI settlement scheme, we took the view from the industry and suggested to SEBI. New SEBI regulation on delisting, we organized program. Pre-pack insolvency, before it came, we invited Chairman Sauser and took the view from the public. MCA 21 version, what suggestion can come, and SEBI provision related to independent director, we have done this. So this is the outcome which we are happy. And we have created a FAQ also on various complex matter and shared with the participant. And then we came out with the 3 program on the insider trading, and on the suggestion on receipt and the questions received, SEBI came out with FAQ on PIT after this program, which we have collected from the people. We have come out with a handbook on merger and amalgamation on government companies, and Gyaneshwar sir was there, who was the chief guest on that day. He gave this particular thing, that how we can help the government company to come out with the better planning. This journey will continue, sir, and this journey will not stop now. We are announcing the 25th June, again because pandemic, we have stopped program, demystify new delisting regulation. Then next Friday, we are doing a startup new ecosystem, and then how strike a good deals, 9 July, and SME IPOs, that is on 16 July, we want to do this. So this is our plan which we want to do. Now I will, with this thing, I will thanks everybody, and without wasting time, I will invite chief guest, Mr. Sahu, to address his inaugural session, sir. Keep it out.
Thank you, Mr. Vijay, Damodaran sir, Goel sir, and other distinguished guests, friends, ladies and gentlemen. I'm extremely pleased to be here. Thanks to Mr. Vijay, and congratulations to you, Mr. Vijay, on scoring half century and very impressive outcomes that you just shared. Let me start with the basics. The mainstream economic thought believes that at any point of time, human wants are unlimited, while the resources to satisfy them are limited. The central economic problem, therefore, is inadequacy of resources vis-a-vis unlimited wants. Similarly, the main legal thought believes that as a person moves from a natural state to an economic state, it loses some degree of freedom. The central legal problem, therefore, is inadequacy of freedom to pursue economic interests meaningfully. Thus, we have twin inadequacies of resources and freedom. Fortunately, there are twin adequacies also, namely, the resources have alternate uses and farms pursue their self-interests. So an economy thrives if it harnesses these twin adequacies. That is, by allowing self-interested farms to have a maximum freedom. And freedom for what? To move resources which are capable of being put to alternate uses from less efficient uses to more efficient uses continuously and seamlessly. And this yields optimum freedom for farms to ensure optimum resource utilization, consequently the optimum economic welfare. So the provision of optimum freedom for market participants has been the common thread of all corporate, economic, and labor reforms over the last 3 decades, which is the subject of today's webinar. Why freedom is important? Because it expands choices for a farm. It allows a farm to undertake any business of its choice in the manner and scale it is comfortable with. We therefore want such business regulations that allow freedom and choice, that enable every farm to participate in the economy, to get in, get out of business, and carry on business with ease. This is what we call today ease of doing business. Better business regulations generally yield more businesses, which usually translates to higher economic well-being. And it is therefore endeavor of every country to have better business regulations to make it easier for farms to do business in the economy. It is easy for a farm to do business if it has freedom to do it. A farm needs freedom broadly at 3 stages of business: to start a business, which is called freedom of entry; to continue business, free and fair competition and marketplace; and to discontinue the business, the freedom to exit. The first stage ensures allocation of resources to the potentially most efficient use. The second stage ensures efficient use of resources allocated. And the third stage ensures release of resources from inefficient uses for fresh allocation to competing uses and consequently the highest possible growth. This enables farms to emerge continuously. They do business when they are efficient, and they vacate this space when they are no longer efficient. The Indian economy witnessed freedom of entry in the 90s, led by changes in several laws, primarily by the reforms in securities laws, IDRA, Import-Export Control Act. Freedom to compete at marketplace in the decade beginning 2000, led primarily by reforms in the competition law. And this decade has witnessed the ultimate economic freedom, the freedom to exit, led primarily by reforms in insolvency and bankruptcy framework. So please note that the provision of freedom, either freedom to enter into business, these are always work in progress. You would never have a situation when one has absolute freedom. This is because freedom needs to be restricted at times in certain circumstances to address market failures or even to protect freedom of others. So it is well established that the economic freedom and economic performance have a high positive correlation. Countries having high level of economic freedom generally outperform the countries with not so high level of economic freedom. The index of economic freedom, which measures the degree to which the policies and institutions of an economy are supportive of economic freedom, has substantially improved for India since the 1990s. The outcome has been astounding. The growth rate since early 90s till 2021, on average, has been almost double as compared to the Hindu rate of growth we had in the preceding 4 decades from 1947 to 92. But economic freedom is of recent vintage and is evolving. So are the organs of the state, the regulators, regulatory tribunals, and also the market participants who have to take benefit of the freedom. It is yet to acquire the sophistication and sacrosanctity of civil freedom. Further, economic freedom is something very relatively fluid state. It is enhanced or curtailed easily depending on the contemporary economic thought and philosophy of the day, and sometimes regardless. At one time, we used to have a right to property as a fundamental right some time ago, but it is not so now. We used to have several legislations using the word control, Capital Issues Control Act, Import Export Control Act. So all these legislations having the word control, those have now been replaced, repealed, or they have been modified in sync with the shift freedom command and control regime to a market regime founded on economic freedom. Economic freedom is not absolute. It has many shades of gray, probably because it is encapsulated in economic laws, a domain served by both economists and lawyers, who I think by their multifarious and often conflicting capabilities confuse the rest of us. So the determination of an issue relating to economic freedom in each context, requires that all possible legal perspectives are considered from all possible economic angles. Let me illustrate the issue with an anecdote from the competition area. 4 persons who had received so-called notices from the competition authority were discussing as to what caused them this predicament. The first person said that he charged a price higher than others were charging in the market and has been accused of abuse of market power. The second one said he charged a price lower than anybody else was charging in the market. He has been accused of predatory pricing and hurting competition. The third one said he charged absolutely zero price and has been accused of creating entry barrier. The fourth one told he charged the very same price as everybody else was charging and he has been accused of a cartelization. And there was a fifth person who was charging a negative price. He has been awarded for promoting competition. Thus, what matters is the different contexts invite the same outcome under economic laws, while the same conduct may yield different outcomes in different contexts. So it is not so much of the conduct as the context, who, why, when, what, where, and how of the conduct that matters. In the civil laws like IPC, that is a criminal law, but in case of civil freedom, murder is a bad, irrespective of the context. Who, why, when, where, etc. is not relevant when somebody is determining the murder. However, the same taxi fare can be bad in the morning, good in the evening under the economic laws. Unfair pricing is bad if it is by a dominant enterprise and not otherwise. So this is the genesis of a rule of origin to guide economic freedom. The rule of origin pervades every economic law, though the extent varies, and the maximum extent is used by the competition law. This has the potential of arriving at either false negatives or false positives sometimes in a context. Further, while no one, not even the state, can encroach upon civil freedom or civil liberty, the state as well as the market participants may encroach upon economic freedom in certain contexts for justifiable reasons, and yet not violate the law. The economic laws therefore allow greater latitude to business, but ascertaining the latitude and using it appropriately requires considerable dexterity on the part of the business or the firm. And the freedom I just talked about that state has allowed, which we call external freedom, that prescribe and prohibit what a business can do and what it cannot. So greater external freedom means less restrictions from external sources, particularly from state. As a part of economic reforms, state everywhere in India, even out everywhere, they have been expanding the horizon of economic freedom. But the economic freedom may not translate into economic well-being if firms do not have internal freedom. The scope of internal freedom depends on the ability and willingness of the firms to make right choice. Many times, the firm self-imposes restrictions on its own freedom, even if the state has allowed it. As a result, it does not always perceive in its entirety the freedom that it enjoys, or even when it does, it restricts its choice set to what it feels comfortable with. This happens mainly because the farm does not have the capacity and the will to realize the internal freedom. Therefore, at any point of time, while the external freedom is the same for all farms, the internal freedom the farms have, that varies significantly from farm to farm, and that makes complete difference to the outcome the farms make. So I think the webinar series like this is one of the means to develop the capacity in the ecosystem, particularly in the farms, because the state has given them external freedom and they need now internal freedom so that they avail full benefits of the reforms, all that underlying the economic, corporate and labor reforms, but without trespassing the boundaries of freedom. Everyone must understand the context, as I gave the example of rule of origin while applying economic laws, and understand the latitude the economic laws offer. We need huge capacity building initiatives in all forms, including the webinars like this, to make full use of external freedom and to take the economy to greater heights. Thank you once again, Mr. Vijay, for inviting me.
Thank you very much, sir. Thank you very much, sir. Now I will request you, sir. We have come out our new edition of CP publication. I will request you. I have sent one copy to you. So this is because this is a e-launching. So I'll request, sir, to please launch this. Thank you very much, sir. Thank you. Thank you. Thank you. So this is a company law manual book, which is an innovative book, which I will send it to all our distinguished guests of honors. They will receive. Thank you very much for. Now I will request Mr. Damodaran and Mr. Anurag Goyal, sir. We have come out with our new app on Companies Act, which will be available on the iPhone and the Android from 22nd. I'll request that Damodaran sir and Mr. Anurag Goyal sir, symbolically, you just inaugurate this. Vivek, please open. So this is our Companies Act app, which we will send it to all of you. And this app is free for all over India. An entire text of company law, rules, notification, standard, SEBI LODR, that you can have a click of button and using this. So this is a new version and new modified version which we have brought out. So thank you very much, sir. Thank you for releasing both the things. It will be available shortly on 22nd. Now, to start this journey again, I will request Mr. M. Damodaran, Chairperson, Excellence Enabler Private Limited, and ex-chairman SEBI, to share his thoughts on this issue.
Thank you, Pawan, for inviting me to this extraordinarily impressive event that you have put together. I'm delighted to be in the company of Dr. Sahu, my old colleague from my SEBI days. Dr. Sahu, that speech of yours was a tour de force. There is nothing that you left for anyone to say, and the philosophical underpinnings of lawmaking in the area of economics was something that you brought out so well that one does not need to go anywhere else to understand why laws are made, how laws are made, what they seek to address, what their shortcomings are, and how they need to be fixed. Thank you very much. It was a great learning experience. And Pawan, thanks a lot for showing us the extraordinary range of initiatives, very far-reaching, very sweeping in their content and scope, and reflective of the commitment that you have brought to this very noble cause of sharing knowledge that is relevant, that is contextual, and that enables people to do the work better. I will take no more than 3 or 4 minutes because I recognize that there are a lot of experts whose views will be shared, and I will sit back and hear them. You had suggested that I speak of some legislative initiatives that are necessary to promote a self-reliant India. I won't look at specific initiatives. Let me say what we need to be a stronger state, a better state, a more productive state, and a more just state. What you need is decision-making at all levels. One of the casualties of what has happened in the last few decades is that decision-making has been discouraged and disincentivized. There is safety in not taking decisions. It almost seems foolish to take decisions in this day and age where errors of commission will be questioned, errors of omission will be ignored. And in that kind of a situation, I believe the priority for all of us as part of the system in a sense, and certainly for government at the top of the heap, is to encourage, enable, empower, and embolden decision-making. If that does not happen, you will not see the potential, the very rich potential that we have translating into performance. And that is the major journey that we need to undertake. Let me give you 2 or 3 examples of good work that has been done in this area. Some years ago, someone sat up and took notice of the fact that on the statute book, there were several laws which were completely irrelevant in our present day context. And therefore, an exercise was undertaken to weed out all of those to see that only those that remained relevant remained on the statute books. But this was a one-off exercise. I wish it had been a continuing exercise. That is something that we need to look at so that we understand in what legal environment we operate. It's easy for you to tell me that ignorance of law is no excuse. My response to that is, please help me understand the law. Let us have simpler laws, fewer laws, better written so that my ignorance does not come out of my not trying to understand the law. That is something that I believe is very important. The other point that I wanted to touch on is this very welcome initiative of the Ministry of Corporate Affairs to decriminalize a large number of offenses under the Companies Act. It is not about writing new laws. It is about ensuring that the infirmities in existing laws, the obstacles that existing laws create, that those are addressed. That is at least as important as writing new laws. And I believe the initiative of the MCA in moving in the direction of decriminalization of offenses, of recognizing that transgressions that are essentially civil in nature are not looked at through the lens of criminal law. That, I believe, is a very positive step. Similarly, if you look at what the RBI has done recently, which is the Regulation Review Authority set up under one of its deputy governors. This is the second time that they're doing it. When Dr. Reddy was a deputy governor, RRA 1.0, as it was called, was set up. This is RRA 2.0. That will take out a whole lot of regulations that are irrelevant and see that we have master circulars that are contextually relevant and easy to understand. Because we had reached a stage when even lawyers who were consulted said, give me some time so that I can check what is the law presently in force and I can get back to you on that. That is something that perhaps we need to address, not just in the RBI. All regulators, all lawmakers need to look at what is the stock element of law and regulation, see what is irrelevant and not contextual, and take them out. That cleaning exercise must be done. The third is one subsection in the Companies Act, and I noticed that my friend Yaneshwar is here. Section 149(12), which pretends to be a kind of protection to non-executive directors, is actually no protection. Because all that it says is that it gives you protection for offenses under the Companies Act in certain circumstances. Most directors these days get show cause notices, not for offenses under the Companies Act, but for offenses under several other acts. Can we add a few words to that subsection and say, and any other law for the time being in force? A similar provision exists elsewhere. I do not know why in the Companies Act that provision does not exist. Perhaps that is one item on my wish list. And the last point that I wanted to make is, our entire approach has been based on distrust for several decades. Distrust the businessman, distrust the person who is taking decisions. We are almost standing jurisprudence on its head and saying, you prove that you're innocent, I don't have to prove that you're guilty. That needs to be changed. You got to treat jurisprudence the way it ought to be treated. Let those that allege irregularities, allege criminality, allege transgressions prove, rather than ask the person accused to prove his or her innocence. And I will put it in as few words as possible. Let us move from distrust and crucify to trust but verify. Thank you very much, Pawan, for the opportunity.
Thank you, sir. Thank you very much, sir. Thank you for giving a nice and illustrated message to everybody, regulator as well as corporate world. Thank you, sir. Now, I will request Anurag Goyal, sir, founder is Shaping Tomorrow Consulting LLP, to share his thought with us.
Thank you, Pawan.
There are multiple options are available that particular assessee can sign.
Yes, sir, please.
Okay. Well, I'm delighted to be part of this very innovative webinar organized by corporate professionals. I would like to compliment you, Pawan, for bringing together a constellation of more than 50 luminaries to share their suggestions on corporate, economic, and labor law reforms. And even more so, on the journey to this webinar, which is in your presentation, I found is really very, very impressive. Well, I'll be very brief and share a couple of things from my experience, which has told me that public discourse tends to focus on what the law should be and the distortions in enforcement. And I think your topic is such that probably most of the suggestions will come on what the law should be, what the philosophy should be, what kind of things should be there. I feel that in addition, the very important process issues and the need for supporting institutionalized mechanisms also deserve attention. So I'll very briefly share two ideas. First, the process for amending or formulating any law should start 3 to 5 years before the need for it arises. Now, this looks very funny, in fact. It's very peculiar. How can you start the process years before the need is, you have the need? But the fact is, the process, and I have made a lot of laws. I have been involved in Companies Act, LLP, Competition Act, and whatnot. It takes years and years. I mean, for instance, Competition Act took a decade before it became, became in force. Companies Act took more than 9 years. And so obviously, if you want the law to be relevant and available when it's required, you have to start early. But that creates a very peculiar situation. Am I saying that you travel in a time machine, go to the future, find out what the law is required to be, and then start making it now? Well, yes, that is what I'm saying. You talk of traveling in a time machine. And how do you travel in a time machine? Strategic foresight is the answer. What is strategic foresight? It is increasingly popular and used technology using artificial intelligence, big data, etc., which tells you which are the possible futures and which is the most probable future. And from that, you understand the impact of transformative technologies, the impact of what is happening all over, how it will affect industry, regulators, and governments. We get insights into desirable business strategies, regulatory architectures, and policy frameworks. Now, this is the kind of exercise what I would suggest can be done. And except India, all major countries take up strategic foresight in a big way. So I'm perfectly convinced that if you arm yourself with strategic foresight, you can indeed start the process for formulation of laws years earlier. And in this context, I would particularly like to draw your attention to the increasing extent of the impact of exponential technologies on every part and segment of the society and the world. Business has a choice to exploit the potential for huge growth, or disappear in the disruption they are causing in the established structures and ways of doing business. So that is the first idea that I wanted to present. And the second idea, again, is that we need to set up institutionalized mechanisms for this purpose. And these mechanisms should also have skills for structuring, drafting of laws, designing effective implementation systems, and the whole creating an ecosystem in which a proper law is formulated and executed, enforced. And this, of course, must be done in close collaboration with all stakeholders. Just as an example to illustrate this approach, when I set up the Indian Institute of Corporate Affairs in 2008, this was one of the major purposes. It was supposed to be a non-partisan think tank and platform for all stakeholders to come together on an ongoing basis. It was meant to organize all sorts of policy and legislative kind of discussion, thinking, partner with institutions and the brains, the very best in the world, and advise the Ministry of Corporate Affairs on all critical issues. The idea was to advise the government about the emerging technologies, changing business scenarios, and the kind of policies that are required. A lot of very ambitious people were involved in this, but that is something we need not go into. And when I'm mentioning this, I'm not saying that I want to talk about the activities of IICA today, but the concept. So we could use this approach for the corporate, economic, and labor law reform that we are talking about. Designing the institutional mechanisms could be the beginning. We could set up the mechanism to have the appropriate skills. So that is all I have to say. I've enjoyed the thought shared by Mr. Damodaran and Mr. Sahu, and look forward to hearing the other speakers. Thank you.
Thank you very much, sir. The foresight is essential not only for the business, for the lawmakers also. That is the message which you have given. Thank you very much, sir. Now I will request our next speaker, Mr. Heartened, ex-chairman of Criminal Law PMLA and Benami Law. No, Dr. Heartened, please. Sir, you have to unmute yourself.
Thank you very much, Pawanji. I greet all the luminaries here and particularly happy to see and hear Mr. Sahu after a very long time, and many known people here. I also greet the learned participants who are your loyal participants in this long journey. I also congratulate you and all other organizers for this singular achievement in efficiently organizing very systematic seminars, webinars for sharing knowledge, in itself a very noble act. I'll be very precise, brief. I'll dwell on anti-money laundering law, that is PMLA, and 5 issues where I think the law, implementation, practice, and way forward needs to be changed. First of all, I'll dwell on a very small thing, but that would tighten the PML provisions substantially in keeping with world trade. Recently, United States has lowered the suspicious transaction threshold from $3,000 to $250. The world trend is everywhere. It is coming down. Ours is quite high. So there will be a need to revise it downwards. $250 or we can have 20,000 INR, something like that. It will put operational pressure on banks, but it is inevitable. So if we want to get rid of money laundering in our vast banking system, but how to work it out, there will be need to balancing operational pressure with anti-money laundering risk requirements. Banks can use, I hope, artificial intelligence, risk-based approach, and can intelligently track and utilize the information. The second point I'll deal with is that anti-money laundering tools need to combat new placement entry points like virtual currencies, particularly in second-tier jurisdictions like Middle East, Eastern Europe, and even in our subcontinent. So, what we need to have tight regulatory measures, not half-hearted ones, towards virtual assets, custodian wallets, flat currencies, prepaid cards, both foreign currency and also rupee denominated cards, and link it to tighter KYC provisions. So this is essential because this has been creating havoc in many areas in laundering money. Then third thing that I'll dwell upon is about ultimate beneficial ownership issue. UBA registers we have adopted, but what has happened? It needs to, there are some jurisdictions like Switzerland, like Cayman Islands, they have not, and some others, they have not done that. In the process, what has happened, money laundering is a world phenomenon. So what has happened that the funds deposited in Switzerland has increased during the current year manifold, not only of Indians from all over the world. Beneficial trust funds all have gone there. So there is a need to address this issue of a UBO register issue and stricter enforcement in Indian context. Then fourth issue is enforcement actions on anti-money laundering issues and litigations for non-compliance of anti-money laundering regulations are on the rise and putting pressure on compliance teams. They are struggling in the process. The work is also not getting what it should be. It is a half-hearted kind of work is being presented. So in the process, the fight is not adequate. There is leakage. It is necessary. A diverse set of strategies need to be adapted by using artificial intelligence, digital technologies more, and not relying upon man or police power usual in combating this thing. And simultaneous with this, it is with increased effort. There are many innocent victims of anti-money laundering law in India, particularly innocent buyers of apartments who have been duped, innocent depositors who have been duped by on these launderers. So there is need to be transparency in investigation and quick arrangement of compensating these innocent people. That needs to be part of the law. And unless that is not done, this law will look more and more draconian for many people. Fifth point that I'll address is that it needs an effective appellate system. The current appellate system needs to be strengthened and expanded, and simultaneously, from the point of view of regulators, the proceeds of a crime definition, proceeds of a crime need to be expanded to include all possible crimes under the law, not restricting it to a few scheduled crimes. I have prepared an exhaustive note on this, which I'll pass on to Pawan, and that includes a few more points. I hope he will share it with the right people. Thank you very much.
Thank you very much, sir. Thank you. We will organize a separate program on PMLA and all these 5 points which are there. Thank you very much, sir. Now I will request Mr. Amit Mohan Govil, Principal Commissioner Tax Policy, to share his point of view. Mr. Amit Mohan Govil.
Thank you, Pawan. You can hear me?
Yeah, you carry on.
Okay. Yes. It's a real privilege to be on this platform with the luminaries that have preceded me, Dr. Sahu, Dr. Damodaran, Mr. Anurag Goyal, Mr. Arindash. They've been my seniors in my role in the bureaucracy. And I am really honored to be part of this huge program that you've set up, Pawan. Pawan is a personal friend, and my respect for him, for his ability to organize such large platforms where you can get so many people together is really appreciated. Now, I work in an organization called Tax Policy Research Unit, and I am going to speak about the role of technology in tax administration. Demonetization, for example, of currency was announced in December 2016. One of the primary objectives of demonetization was removal of black money in circulation. India has since moved towards goals of transparency and efficiency by introduction of technology in financial transactions. Market-driven innovations have led to development of financial tools and electronic payment instruments. UPI-based transactions, for example, which were introduced by only 35 banks in December 20, which were authorized by only 35 banks in December 2016, seen a rise of 1.99 million transactions of value of 700 crores to 216 participating banks with 2,700 million transactions of more than rupees 5 lakh crores in March of 2021. So this is how just UPI has enabled digitization of financial transactions. India also recorded the highest number of real-time online transactions in 2020 at 25.5 billion as compared to China at 15.7 billion and US at only 1.2 billion. A similar revolution based on technology is taking place in the tax department. A scheme for faceless assessment has been introduced by the government in August 2019, of which the first cycle has been completed for financial year 2021. This scheme, in line with the policies of the government, has been introduced to ensure transparency, efficiency, and convenience to the taxpayer. This faceless assessment scheme has been preceded by world-leading technologies in filing of tax returns, like in India, nearly 99% of all taxpayers file their returns electronically. All these returns are processed, and now the period for processing of returns has been reduced to a very, very short time. In fact, it is literally in real times. Last financial year, there were more than 6 crore returns that were filed, and returns are being now processed on a real-time basis. Then processing of refund, selection of cases for scrutiny. This is also based on technology. And we use computer-aided selection for scrutiny based on artificial intelligence and machine learning for selection of cases for scrutiny. There is no human intervention, so to say, involved. It is all based on information, which is, coupled with technology, and that is how we pick up cases, select cases for scrutiny. The number of cases that are picked up for scrutiny per se has reduced, and as a percentage is less than even 1% of the total returns filed. Then credit for payment of taxes through the form of 26AS has been very, very effective. Then credit of tax refunds to the bank accounts of the taxpayer directly, and many such taxpayer-friendly measures have been taken by the tax department in the recent past. Now, the faceless assessment scheme has been followed by further amendments such as pre-filling of financial transactions to the taxpayer in the form 26AS and pre-filling of financial transactions in the return. These steps have been taken to ensure that taxpayers are not required to physically visit the tax department and can conclude tax proceedings from the convenience of her home or office. Similar facilities have been created for appeal, penalty, and prosecution proceedings and proceedings before the appellate tribunal. The digital revolution in financial transactions brought about through technological innovations has led to increased formalization of the economy, as well as transparency in transactions, which would eventually lead to better compliance by taxpayers as well as efficiencies in tax revenues. We have had a first full year of faceless assessment in financial year 2021. Nearly 105,000 cases have been completed under the faceless scheme, and additions have been made only in 8 to 10% of the cases. The objective, therefore, is towards self-declaration, correct reporting, compliance, and payment of taxes by the taxpayer, and minimum interference by the tax department. Similarly, cases have been initiated for faceless proceedings before CIT appeal and penalty proceedings. Now, a new portal has been created for a seamless filing of income tax returns. After a few glitches, it is expected to stabilize soon, making filing of tax returns and payment of taxes easier for the taxpayer. So the point that I was trying to make is that through the use of technology, and we are removing point-to-point interface with the taxpayer, and so that maximum services are offered to the taxpayer with the use of technology without having to physically visit the office of the tax department. So these are changes that are happening as we speak, and they are for the benefit of the taxpayers. And through this platform, I just wanted to inform that these are some paradigm shift changes that are taking place in the tax department. Thank you very much for your time, Pawan.
Thank you very much. Thank you, Amit, for giving the insight and what is happening. No doubt, if we follow this process, India can become more taxpayer will join, and India can become more reliant. Now, come to the next speaker, Mr. Pawan Kumar. He is the Deputy MD of IIFCL project. Sir, what is your view on this? That how they knew this IIFCL can help India become Atmanirbhar? Pawan Passer.
Thank you, Pawan. Let me start by paying my deepest regards to my ex-bosses, Anurag Goyal sir, Dr. Sahu, Damodaran Saab, and R.N. Das sir. I think I had the unique privilege of working with all three of them in Ministry of Corporate Affairs and Department of Revenue, as well as in IBPI. Now, let me also compliment and echo the same sentiment which my batchmate has just shared, that probably you can give a run for money to any trade and industry chamber of commerce by organizing such a wonderful webinar and hosting a galaxy of speakers on a platform like this. Pawan has been instrumental in, I think, in last couple of years in organizing a series of webinars on various topical themes wherever the contemporary changes in various economic laws have taken place. So really hats off to you for bringing out the unique amalgamation of law as well as technology as you launch the mobile app also. I think which will go a long way in serving the needs of the professionals as well as the students of the law. Now coming to the theme of Atmanirbhar Bharat. So I would say that yes, being a tax collector, I thought was a different or difficult job. But let me say that giving money in infrastructure financing is probably a more tougher job than collecting taxes. As regards the focus of the government, we know that has been on taking the country to a 5 trillion economy by 2025. And now with COVID in our backdrop for last 2 years, last 1 year, and this year, the scene looks bleak. But nonetheless, the government is making all the efforts. And in this direction, we know that infrastructure sector can play a very, very important and catalytic role in taking the economy to where we want it to and be a catalyzer of economic development. In that direction, in the last session, the government has passed the bill, National Bank for creating a National Bank for Financing Infrastructure Development Bill. So that has been passed. So that will go a long way. And IIFCL in its bit is a unique financial institution which is providing infrastructure financing to all the subsectors of the infrastructure sector. And we have a loan book of, as on today, more than 1,37,000 crores. And we are players in power sector, major player in power, in all forms of power, whether it is a renewable or thermal or wind, we are there. In road sector also, we have a substantial chunk. It is in, and also in ports, airports, waste energy development. In almost all the infrastructure sectors, we are playing a dominant part. Of course, one of the predominant challenges with regard to recovery of NPS, that has been one factor which plagues, I think, most of the infra financing. And the IBC has been a kind of a game changer in this regard. We have been able to make a lot of recovery through this mechanism, but still I would say the capacity constraint in terms of NCLT benches, that is something which is a factor. The slow pace and the litigation which gets prolonged in making recoveries is a factor. As a banker, though, I'm taking all the steps wherever required to expedite the decision making on the part of COC, whatever is required. So I heard that model code of conduct is also being in the works for members of COC, which will also speeden up and hasten the process of recoveries in this regard. So ultimately that will provide us strength. We are also, apart from Greenfield, we are also the focus of the government is to provide and develop the bond market and also go for brownfield projects. So we are doing that also by way of takeout finance, and also InvITs and REITs are also there. So we are seeking permission of the RBI to go for InvIT financing, which at present is allowed to banks, but not to the infrastructure financing companies. So since we are the only government-owned, 100% government-owned financial institution, which is in the field of infrastructure financing, so we are hopeful that soon it will come. And we will have a part to play, not only in terms of infrastructure assets in the road and port, but also in terms of seaport, because Bharat Sagarmala is also ambitious project. Apart from that, Jal Shakti Ministry also we are closely coordinating and providing funding for drinking water supply. So these are few areas, and I would also like to bring to the fore that as regards the role of infra financing in catalyzing the economic development is concerned, not only India, but the same institution has also been recently created in UK also. The bill was announced in March, and they have yesterday only created that infrastructure bank for financing of infrastructure. And then also in USA also, the same debate is going on, so that the governments can put more emphasis on improving the well-being of the society. And the Republicans and Democrats are still debating about the possible structure of the bank to be created for infrastructure development. Another focus area of the government has been on the asset monetization, whether it is the roads or the power grid infrastructure. We are trying to create ways and means and instruments whereby the asset capacity, which is already functional, which can be monetized, and the capital tied up can be freed up, so that more number of greenfield projects could be taken up, which have their own inherent risk involved. So we look forward to challenging times ahead in next couple of years, and look forward that this National Bank for Financing of Infrastructure takes early shape, and we kind of take up a greater role to play in the economy. Thank you very much, Pawan, for giving me this opportunity to share my thoughts with the galaxy of panelists, and look forward to hearing more words of wisdom from my co-panelists. Thank you very much.
Thank you very much, sir. Thank you very much for showing us that how the India is developing and how this your organization IIFCL is helping. Now I will request Gyaneshwar sir to share his view, because we organize so many programs and sir was the helpful for us, and we have done. So Gyaneshwar sir.
Thank you, Pavanji, for giving me this opportunity. You have always been like a friend, and his organization is always like a phone call away. We have been using his organization for research input on a regular basis. It is extremely difficult to speak on a policy reform agenda in presence of our gurus in the bureaucracy, retired civil servants. As for example, we have in this panel our ex-secretary Anurag Goel sir. Then we have M. Damodaran sir, ex-chairman SEBI. Dr. Sahu is working with us as chairman IBBI. Distinguished guests and friends, I will try to flag one important issue which had some way we have not discussed enough in this country. That is role of responsible business conduct, sustainability, and its role in achieving target of 5 trillion economy. The world is moving in a different direction, and some way we have not given enough focus on this issue of philosophy of business, which is changing. So what is the new philosophy of the business? We have to first address this issue. We had read about Friedman, which talked about in a book that corporate social responsibility of the business is to make profit. So that was one framework, shareholders framework for the business. Now the paradigm shift has taken place in the business philosophy. We talk about journey from freedman to free man. We today talk about stakeholders capitalism. And this has come not from India. This has come from the global experience, because every year in Washington, there is a CEO roundtable conference where more than 180 CEOs they gathered. And 2019, they gathered and they defined a new business philosophy. And they talked about now the business has to be redefined in terms of stakeholders. So the purpose of business had changed. Same argument was also discussed in roundtable, different roundtables and Davos conference. So what is happening right now, that throughout the world, there is a focus how we can include community, environment, supply chain in the business, because unless we include them, the business will not be sustainable in the long run. And what will happen if business is not sustainable in the long run? We will be losing investment, we will be losing market, we will be losing customer. Somewhere we are lucky that our Companies Act 2014 talks about a different framework of corporate governance, and we are unique. I'm proud of it that our seniors, they have made this Companies Act in such a way which talks about responsible business conduct in a very clear manner. I'll just take liberty of reading a line from 166(2) of the Companies Act. It talks about a director of a company shall act in good faith in order to promote the objects of the company for the benefit of its member as a whole, in the best interest of the company, its employees, the shareholder, community, and for the protection of the environment. So it's inclusive. Same philosophy has been talked about throughout the world in terms of ESG philosophy. Now the time has come, we have to recognize the importance of non-financial information also. I have seen whenever new investor is coming from abroad, they are looking for non-financial reports. So we have to give focus on non-financial reports equally as we are giving on the financial report. Similar way, we have to think how to develop the mechanism to address the grievances of our stakeholders when we talk about the business ecosystem. In the world, there is a new paradigm, and that is being talked about new framework of corporate governance. In that framework, what is being talked about is a extension of responsible business conduct in a different way, that is called business and human rights. So business and human rights is nothing but a some way manifestation of responsible business conduct. Around 44 countries, they have come with National Action Plan on Business and Human Rights. In 2011, United Nations Guiding Principle came. We talked about protect, respect, and remedy framework. Now there is a talk of having a law, hard law, to regulate the work and the conduct of the multinational. So at this moment, as a country, we have to really develop our own framework. We have to develop our own framework for financial reporting. There are a number of reporting, whether it's a GRI, IR, ISO 26000, UN Compact. So we have to standardize, and we have to make life for corporates easy. In the same way, what we have done, we have published a report in 2020 based on national guidelines on responsible business conduct, which is updation of 2011. What ministry has done it is national voluntary guidelines on environmental and economic responsibility of the business. So actually, what was guidelines was developed in 2011 that broadly covers ESG, that broadly covers 3P of the business: planet, profit, and people. So on the basis of that, it's a really heartening news that SEBI has recently come out with a new reporting framework, and this framework is applicable on 1,000 companies as for market capitalization. Now the time has come, we have to work together, and we have many corporate professionals here, how to develop that ecosystem, develop the capacity building of our professionals so that they can be helped. At the same time, the time has come, many other companies which has not been covered, like unlisted company, private companies, but they have also substantial business interests. how they also start reporting on this business responsibility and sustainability reporting. This is a challenge. There was another topic also I thought to discuss with you in the conference, but there is a shortage of time. I will just stop it here. Wish good luck to Mr. Pawan Kumar Bise. I hope he will continue to work for knowledge management and create this kind of an online platform for the professionals, and we'll have this opportunity to constant upgrading our knowledge and skills in the context of globalization. Thank you so much for inviting me. Thank you.
Thank you, Therim. Thank you very much for giving insight and the message to the corporate world and professional. Now I will request Mr. Manoj Pandey, sir, Joint Secretary, MCA. He will talk about how the MCA 21 and the ease of doing business is taking place and how this can helpful for making India self-reliant. Manoj Pandey, sir.
Good afternoon to all respected seniors who were present, and I have also had the privilege of working with some of them. MCA 21 has helped business community in not only in growth but also in prosperity. Now I'll give you an example. When the entire concept of MCA 21 commenced way back in 2006, in fact, it was beyond imagination that how the entire thing would get digitized. As the things progressed, in 2016, when we started with this concept of central registration center, from any corner of the country, you could have incorporated a company, and thereafter LLP, when we started this LLP incorporation also. Thereafter, when we see how digital transformation, in fact, digitization is helping business, through a single form, through a single incorporation form, a corporate is getting 11 services. I believe it's not happening anywhere in the world. If you file one form for company incorporation, you will get 11 services. You are getting a PAN, you are getting a TAN, you are getting ESIC, you are getting EPFO, you are getting a bank account, you are getting professional tax registration for West Bengal, Karnataka, and Maharashtra. And now we have integrated with shop and establishment Delhi. So it's a huge platform, and the business houses or the corporates are getting huge facilities because you do not have to move to different offices and to different establishments. It's one electronic platform which is giving all these services. This is how digital transformation is happening. Nobody would have imagined. In fact, when we launched it in February 2020, we were also slightly apprehensive that how the things will roll out. But thankfully, in fact, our electronic platform worked, and with the help of professionals and with the help of all the stakeholders, we could make it happen. See, you know that after March 2020, it was a period of lockdown. It started with lockdown first. Thereafter, in fact, everybody was expecting that our central registration, how it would function. But it continued to function and incorporate companies and LLPs. So our professionals were, in fact, they started working from home. Corporates started filing the forms, and the companies were incorporated. Why? Why? Because of use of digital technology. And at that point of time, and at the same time, we launched this integrated form also. So suppose a company is getting incorporated and is getting all services together. nothing would be more beneficial to a company, and it can work, it can start a business immediately. We got integrated with 9 banks. We got integrated with different state governments. And now all platforms are integrated. So I think all the professionals, all the stakeholders would be pretty aware of this issue, that what is happening. Now, the numbers, if we talk about numbers, how because of this because of this platform, with the help of technology, and also the confidence in the system which has been generated, you will appreciate when I give some numbers. During fiscal year 2021, 1.55 lakh companies got incorporated, which was 27% more as compared to 29-20. And now you can imagine it. So it was a period of lockdown, pandemic. 1.55 lakh companies would mean 27% more companies getting incorporated. More LLPs also got incorporated, and 42,000 plus LLPs also got incorporated, which is more than 17%. Now, all these companies during lockdown, they would have to go or to use different platforms, or to go to different offices to get a number or to open a bank account. That was made available on a single platform. So this is how India is transforming, and this is how ministry is helping the business. This is a digital transformation which we have brought in. This year also in May 2021, our incorporation number is increasing, is much more than what we had achieved last year. Number of LLPs have also gone up. During this period only, we have also launched, we are going to launch, or we have partly launched our MCA version 3. Now, if you see what is the motto of, if you see our portal, it's giving a changed look now, and we are going to use, as it has been used by other senior panelists also here, analytics, use of machine learning, use of artificial intelligence, and a platform which will not only help the stakeholders in compliance, but also to detect the possible corporate misgovernance which might be happening. That this is what is the vision which will be rolling out in phase 2 after October. So at present, it's only front face has changed. Our look and feel, if you see, website had changed. Our e-consultation module has been launched, which will have features of artificial intelligence and machine learning, when it will start detecting the sentiment behind a particular act and a section, when the stakeholders would be filing their online views on a particular act, on a particular proposal, on a particular paper. So it will be a very good consultative process. With the help of machine learning technology, we will come out very fast with our recommendations to the government, or we can formulate a better proposal in consultation with the stakeholders, rather than shifting to lot of voluminous papers. This is how, again, use of technology will help us. I'll summarize. I know that because of limitation of time, Pawan has already said that you should speak not more than 4 minutes. So I'll summarize what Ministry of Corporate Affairs vision regarding business would be, or is. Ease of doing business while handling challenges of enforcement towards robust corporate governance. And the words I'll take from our, if you see the portal, we have, it's our stated view: empowering business, protecting investors, as a regulator, as an integrator, as a facilitator, and as an educator. If you see our ebook and e-consultation 2 modules, they have been rolled out in this fashion. I think after October 2020, during this 2021 and this fiscal, you will see more and more digital transformation. Please be part of this transformative process. We invite you to join as stakeholders, give suggestions, and help us in providing a robust framework for not only compliance, but also towards better corporate governance. Thank you very much.
Thank you very much, sir. No doubt MCA 21 is giving a new way to the professional and the corporate world. Thank you very much for taking initiative and bringing out. Now I will request our foreign speaker, Mr. Mark Jaila. He is the chairman of Standard Review Board, and he has joined us from USA. I'll request Mark, please share your thought.
Thank you very much, and congratulations on the new book and the app, and I'm sure it'll be very well received. In addition to my valuation practice here in Atlanta, I chair the Standards Review Board of an organization called the International Valuation Standards Council, or the IVSC. The IVSC is the only global multidisciplinary valuation standard setter. The role of the Standards Review Board within IVSC is to develop and change valuation standards, multidisciplinary valuation standards, which is known as IVS, or International Valuation Standards. IVS is comprised of 2 parts. One, a general set of standards that applies to all disciplines. And then there is a second part that has standards specific to various disciplines, primarily business valuation and intangible assets, tangible assets, real estate, and then financial instruments. In addition to our role of providing standards, high quality multidisciplinary standards globally, we're also becoming a voice of the profession and providing input from a valuation perspective to other standard setters. So as such, we work closely with organizations like the International Accounting Standards Board, the International Audit and Attestation Standards Board, the International Organization of Security Commissions, or IOSCO, and here in the United States, the FASB. And we provide input into other standards that may have a valuation component. IVSC is comprised primarily of valuation professional organizations, or VPOs. We currently have over 100 across the globe that are members of our organization. We also have corporate members, or large international accounting firms, valuation firms, academic institutions that also are sponsors of our organization. The reason why multidisciplinary, high quality global standards are important is if you think about all types of transactions, they have a valuation component. So it can be either for mergers and acquisition, financial reporting, tax, insolvency, investments, real estate acquisitions. All the underlying component of any of those types of transactions is a valuation. And as such, there needs to be common valuation standards, so that a valuation standard that is done in Mumbai or in Montreal or Moscow or Madrid should be done in the same high quality, consistent manner. The reason for this is it aids in efficient global commerce, but it also enhances the public interest or the public trust in the work that the valuation profession does. And the valuation profession, as I mentioned, there for a number of different reasons, purposes, transactions, is an integral part of financial reporting. So in financial reporting, to ensure the high quality of financial statements, it's important that there be high quality valuation standards as well. Some of the projects that the IBSC is currently looking at that as a result of our recent agenda consultation include evaluation issues related to ESG, or environmental, social, and governance. We're seeing that as becoming an increasingly important component of investments. And so there are questions of how to capture the value of incorporated by ESG in transactions. And we're also looking at internally generated intangible assets. If you think about the market to book ratio, for example, the market is capturing value that financial reporting's not seeing or not reporting. And typically it's involved in internally generated intangible assets that the market's valuing, but current accounting standards lag. So we're looking at how we can improve the quality of internally generated financial reporting. We're looking at valuation models, the role of artificial intelligence in valuation. Financial instruments is an important concern of regulators across the globe. If you think about the financial crisis in 2007, 2008, it was a result of various valuation issues related to securities. And so there needs to be consistent valuation standards related to financial instruments across the globe. Valuation of inventory, non-financial liabilities, a consistent understanding of market value, and then related to the current economic conditions brought on by the pandemic, the valuation uncertainty. It increases the potential outcomes based on investments, and how do we handle that as valuation professions? So there needs to be, if for an interest in public trust, to aid in global commerce, there needs to be a common set of high quality, consistent valuation standards. So that's the message I'd like to leave you with, is the importance of international, consistent, high quality valuation standards, not only in India, not in the United States, but across the globe as well. Thank you very much, and I appreciate the opportunity of presenting to you.
Thank you, Mark. Thank you very much for sharing your thought on this issue. Because of a shortage of time, we will organize separate program. So now I will request from industry point of view, our next is Mr. Anil Khetan, who is the ex-president of PSD CCI. Mr. Khetan, your views, sir.
Thank you, Pawanji, and a very good evening to my honorable co-panelists. It's been a tough year, but I personally feel, from the industry perspective, Government of India has done a good job in announcing the Aatma Nirbhar package. If you calculate, approximately 46 to 50 announcements were made at different intervals. There were announcements on government reforms, privatization, public to privatization. Then the states could borrow more as a percentage of their GDP. On the policy highlights, they came out, no government tender above 200 crores will be floated internationally. On the financial highlights, government gave benefit on Provident Fund. Then we had amendments of the Companies Act. We had the decriminalization of the Companies Act. A lot of money went to the agriculture and allied sector. MSMEs got a great credit guarantee scheme of 3 lakh crores. Then there was reforms done by the government in civil aviation, defense, energy and space. And from my industry point of view, the biggest reform which we've got, but which is yet to be implemented, and that is the labor codes. The 4 labor codes having been signed, and especially on the industrial relation labor code, government and the parliament and the president all have signed, and the clause of fixed term employment, where industry can employ a workman fixed term, 1 year, 5 years, renewable, provided you pay the same social security, whatever we are paying to our permanent workmen. Another great scheme is the PLI scheme for 13 sectors. Say I come from the pharma sector. Our PLI scheme has been already announced. Luckily, my company makes specialty heart capsules. That has also come in category A of the PLI scheme. And I tell you, it's a great, great incentive for any human being if you are rewarded for producing technological products. And that is self-reliant Bharat, Aatma Nirbhar Bharat. Another thing which was great, which came about 2 or 3 days ago, that board meetings have been made virtual. That would save a lot of money for MSMEs in particular. Another thing which we all in industry are looking, government has repeatedly announced, but they have not yet implemented. That is that we can buy power. We can buy power from a DISCOM, which is the most competitive, which gives us quality power. That is because our power cost, believe me, ladies and gentlemen, is very high in India, just like our logistic cost is 14% of our GDP, whereas the international logistic cost is only about, I think, 8% or so. And personally, I would like Reserve Bank. Yeah, and then it was followed by a fantastic budget on 1st February. And honestly, I really felt very enthused and motivated that my country is now going to take off. And then came April, then came May. But still, I think we are out of it and we will again soar. So I would personally seek an expansion in the Reserve Bank of India's balance sheet to meet the demand exigencies of the COVID-19 and the COVID-21 pandemic. And as we've seen right from Reserve Bank, State Bank of India, IMF, World Bank, various rating agencies have downgraded the GDP growth, and it's between 9 to 11%. And the government, I feel, should come out with a fiscal stimulus of 3 lakh crores at least, including cash transfer to households through Jan Dhan account to perk up the demand in the economy because of the second wave and spur economic growth. I also personally feel that government has headroom for about 3 lakh crores, and this amount can be channelized towards direct cash transfer to vulnerable people, higher allocation to Manrega, short-term GST rate cuts, lower excise duty on fuel. Fuel has become prohibitively expensive. We all know that. And because the most important thing for we in industry is to support demand so that we have jobs, we have livelihoods. I hope we will start recovering again, which I am quite hopeful about. I would further suggest to the government to increase the emergency credit line guarantee scheme, which they have done at 3 lakhs to 5 lakh crores. And they had given a moratorium. Of course, they upgraded it, from 20% to 40%. Now they have removed the 500 crore loan also. So I think these are good things that the government has done. And now the whole thing, to conclude, my fellow Indians, is vaccination. Faster we vaccinate, the faster we get back on our feet. And what I mean faster vaccination, unless India, let's be practical, unless we vaccinate 80 to 90 lakh people a day, we will not be able to reach our desired talks or sermons or whatever we see in the print media. Thank you so much for your time, ladies and gentlemen.
Thank you very much. Thank you very much, Ketanji. We remember that you have struggled and fight for the decriminalization of corporate law offense, and ministry has accepted your suggestion. Thank you very much for this contribution. Now I'll go to Mr. Ashok Agrawal. He is the chairman of Globe Capital. He is one of the best and finest capital market professional. He's a chartered accountant by profession. Ashok Agrawal ji, what is your view on capital market point of view related to Nirbhar?
Thank you, Pawanji. I think congratulations to you. This is your golden Jubilee webinar, and you have kept everybody engaged during this pandemic. You know, you have not let people feel that they don't have anything to do. Okay, so you have given me the topic on Aatma and capital market. You know, India and Indian capital market is one of the most efficient capital market in the world. We have T+2 settlement system. We have all trades guaranteed. We have all trade in demat form. Still, we find that open interest in Nifty, which is our main index, is 200 times the open interest of Nifty in India on NSE. Now, while we talk about Atmanirbharta, it is something which is not digestible. Similarly, you know, we have Indian rupee getting traded in India, but the volume of Indian rupee and open interest of Indian rupee trading in OTC market outside India is at least 100% more than what is getting traded in India. So I think that is something which we need to look at. And you know, the main reason for that is high cost of transaction. In the scheme of things of government, they have GST and GST for trading and GST for service industry. For capital market, we have the GST, but we also have STT and CTT. So we pay GST, but we also pay STT and CTT. And you know, that consists 70% of the capital market transaction in India. So 70% is the cost that goes to the government, and 30% is something which is charged by the intermediary. So this is what is happening is, you know, our trade to market capitalization ratio, which used to be more than 100% before STT was introduced, now it has come down to 46%. Even in commodities market, before the introduction of CTT, our volumes used to be 70,000 crore. And in some commodities, we were number 2 or number 3 in the world. You know, India is the largest or maybe second largest importer of gold in the world. We are importer, consumer or exporter of many commodities where we are number 1, number 2 or number 3. But still, we are a price taker. We are not a price setter. You know, globally, wherever you go to any exchange, you will find Indians in dominating position. But still, we are a laggard as far as the volumes is concerned. A Hindalco or a Indian Oil or a Vedanta, they have their positions outside India and not in India. In fact, I'll tell you a personal experience. One of my client, which is an airline, they said, I will have my position in India. Okay, I convinced him. But when he came and started hedging, he found the volume and the liquidity very low. He said, I can't hedge my position in India because the liquidity is very low. And why the liquidity is very low? Cost of transaction is the biggest reason why the liquidity is very low. We had, before 2004, there was no CTT. In 2004, government introduced CTT. Along with that, they introduced Section 88E, where STT paid was allowed as a deduction against your income. In 2008, that was also removed. So now in 2004, there were 100% exemption on capital gain tax. So your income from capital market was exempt, and there was no dividend paid on your dividend income also. So now, as of today, we have capital gain tax, we have dividend, which is taxable in the hands of the recipient, and we have STT and CTT, which has been increased further. So that is putting a lot of pressure on our liquidity. In fact, if you want to, let us say, buy copper without impact cost, impact cost is the biggest measure of liquidity. So how much you can buy in India? You can buy maybe 1 crore of copper in India without impacting the market price. As against that, you can buy 49 crore of copper in China. Our Indian commodity market volume, which were around 70,000 crore before, by 2012-13, before introduction of CTT, has now come down to 28 to 30,000 crore per day. Whereas going by the trend, the volume should have been more than 150,000 crore, because if you count the increase in volume that has taken place everywhere else in the world. Secondly, NRI is one section which has always been giving us support. Whenever India faced problem of foreign exchange, we came out with special schemes for NRI deposit, and they supported it. But you will be surprised to know, as of today, NRIs are not allowed to trade in derivative market on external account. They are allowed to trade on the local account where the remittance is not allowed. Similarly, NRI are not allowed to trade in our currency market. So one of the reasons why the rupee dollar volumes are high in OTC market and in foreign jurisdiction, because NRIs are not allowed to trade in our commodities market and our currency market and in derivative market. So I think for Aatma, the government and the regulator should look at these changes. Similarly, India is a market where capital markets and investors in capital market are starved of financing, starved of leverage. And that leverage was provided by broking community through intraday financing, and that was also helping in liquidity. But now our regulator have come out with a scheme where from after 30th September, no intraday leverage will be allowed. So, when you are an individual investor and you go to bank, the maximum finance that a bank gives to an investor as per RBI norms is 20 lakh. So if you want more finance against your share, only way you can get it is through NBFC. Bank financing is not allowed. And through a broking entity, intraday trading was creating liquidity. Now, this liquidity tap will also be closed. So I think that also again needs to be looked at. Again, there are small irritant. If you are a PMS investor or a AIF investor, you have to invest minimum 50 lakh in PMS and minimum 1 crore in AIF. Why these limits should be there? If at all there is a limit required, you say a net worth limit. That okay, if you are an investor in PMS or AIF, your net worth should be minimum this much. Why is that the restriction that you should invest minimum this much amount in PMS or minimum this much amount in AIF? Because you may want to invest in 5 PMS. You want to diversify your portfolio. So you will have to invest minimum 50 lakh in each PMS. You want to invest in 5 AIF. You want to diversify. You will have to invest minimum 1 crore in each AIF. So these restrictions are not desirable, are unnecessary. They should not be there. But friends, despite all this, our market are very vibrant, very efficient, because India as a country is going to do wonders in next 2 to 3 decades. Because the growth, I think this year, our growth is likely to be in double digit. But when we talk of growth, we cannot forget agriculture sector. We have, let us say, we have MSP, concept of MSP. And let us say the wheat MSP is around 1900 rupees. Now, the government buys wheat in the market through MSP and stores it in FCI and incurs, I think, gives a subsidy of maybe 1 lakh crore each year. Now, why can't we use our commodity market for as an alternate? I'll just give you one suggestion. We have options. Let us say the MSP is 1900. So we buy, government buys a option for wheat for farmer at 1900 rupees. What will happen if and the option will be exercised by the farmer. If the price of wheat goes up, then the farmer will have the option of selling that wheat in the market. Let us say the price of the wheat is 2500. Farmer can sell that wheat at 2500 in the market if the price goes up. If the price of wheat goes down, let us say 1500, farmer will have the right to sell that wheat in the market at 1900 rupees. And at a fraction of cost of what the government pays for storing that wheat for 1 year or 2 years, you can buy a option. Of course, you cannot use it fully. You will still have to have MSP. But if a part of that MSP is diverted to the market through options, it will be very good for the farmer. He will get a remunerative price. He will get the upside also. And it will cost only a fraction of cost to the government. So I think, of course, for that, we need liquidity in our market. So I think government can use our capital market very judiciously for achieving their target and for GDP growth. Pawanji wanted me to speak only for 4-5 minutes. So I like to close, and I like to thank him for organizing this webinar. And I think he has launched an app for this Companies Act. Good, congratulations. And I think Pawanji and his organization is doing, Company Law Professional is doing a great job. And I think connecting and departing knowledge. Thank you. Thank you very much.
Thank you, Ashokji. Thank you for giving insight of the commodity market and capital market. Now, our last speaker of the inaugural session, Mr. Shailesh Haribhakti, has joined. So I'll request Shailesh Bhai to say a few words of your and share wisdom of your knowledge, sir.
Thank you very much, Pawan. First of all, kudos to you for keeping 450 people engaged for such a wonderful webinar. I can imagine the impact that corporate professionals has been having throughout the pandemic because of the amazing speakers that you're able to bring together. My kudos to all my previous panelists. I'm the last in the order, and so I will not repeat anything that has gone before. But let me begin by saying that my first thought is that everything that we do going forward to become Atmanirbhar has to be through the lens of sustainability. So here we have 450 people. If we can influence all the organizations that we work with to bring their net zero commitment 1 year forward, we would have done, Pawanji, a phenomenal service to the entire world. And the stock of India in public mind all over the world will go up. Why is this important? Because what this will do is it will create ease of doing business, ease of starting, ease of closing, digital, all the great things that Mr. Singh, Mr. Pandey, and all the other wonderful speakers said can happen only if we have a planet that we can live in comfortably. And we do not have the black swan events that we saw in the last 2 years. Second, the entire framework of inclusion now needs to go to rural India. The wonderful digitalization that has been done for urban India now needs to move to rural India with the FPO and the single person company paradigms that we have innovated with. If those can be automated and added to the MCA wonderful digital platform, that can create an inclusiveness revolution of the kind that we have yet not seen. I would recommend that very strongly. Because it's only when rural India starts growing. And I have seen that simply by converting land which we have given up to crops, to fruit trees, you can increase farm income by 5x. Now that is something to go after. And you need to organize that part of our country where more than 55 to 60% of our population lives. I was deeply impressed by what Mr. Amit Govil said on taxes. We now need to go just one step forward. Let me say that the world is absolutely stunned by the fact that we have a digital GST, that we have faceless assessments and faceless appeals. It is an absolute innovation of the kind that does not exist anywhere else in the world. We now need to go one step forward and move from tax assessments to tax determination, and do that in waves and phases. So let's take out of our 6 crore return filers, if about 5.5 crore can be tax determined, and you just get a bill of cost that this is your tax, pay it, and you pay it. No appeal, no question, no answer. We are just one step away from it because we have the tax information network, we have the infrastructure, we have the digital capabilities, and we have the ability to actually make this happen. We will be an amazing example for the whole world. To create scale, I would recommend, Pawanji, that through your seminars and through corporate professionals, get the micro and small enterprises to go in for virtual mergers, to enable them to get to finance, succession planning, and other utilities of that kind, which is what is stopping them from continuing to exist. Let them come together in a virtual form. Let company secretaries of this country come together. Let chartered accountants of this company come together in virtual mergers or networks. Because it's only with digital skills and with AI and ML, which has been mentioned so often throughout this webinar, that we'll be able to become Atmanirbhar. This is a very crucial element to save a large part of our country from being closed down. Very critical. And finally, why can we not, through this forum, 500 people gathered together, say that we will commit to zero litigation pendency beyond 6 months, which is what many jurisdictions have actually been able to accomplish, only in commercial and tax laws. If we do the tax determination, in any case, 99% of tax cases will be over. But now we need to go that one step forward and say that we will not have pendency of more than 6 months anywhere in the field of commercial laws and tax laws. I'll end there because I'm deeply passionate that we need to be Aatma and we need to be an example to the world. After all, there's a good chance that if not this year, certainly next year, we'll be the fastest growing economy in the world. Thank you, Pavanji, and good luck to all your great efforts.
Thank you very much, sir, for precise and very impressive address to all of us. So now we have come to end of this inaugural session. So I will tell friends, with this, we have come to an end of this fantastic inaugural session. I wish to propose a very hearty vote of thanks to our chief guest, our guest of honor, for sparing their valuable time and being with us and sharing their perception and the changing for taking India forward. Listening to them was a real treat to all of us. Thank you very much, sir. Thank you. No doubt the inaugural session is over, but you please, if you have time, please continue and listen to other speakers. So without doing this, I'm going to the next our knowledge session, and I'm starting with Mr. J.N. Gupta ji, who is the ex-ED of SEBI, and he is working in a proxy advisory. He's the founder of the stakeholder empowerment. Mr. J.N. Gupta, and my request to all, we have overshoot some time, so please confine to the point and we can move on this. Mr. J.N. Gupta ji.
Thank you, Pavan. Without wasting time, we'll come to the topic straight away. See, the governance will always be work in process, but still we got to keep on working. So I have identified 3 main pillars of governance. 2 are the gatekeepers, that is auditor and independent director, and 3rd is the judiciary. As Mr. Haribhakti has said, that judiciary, if the pendency is reduced, probably things will change fast. But I would say the first is that judiciary has to be efficient and efficacy of laws have to be strengthened. Today, what is happening is the entire judicial system is loaded against victim. Because victim is already down, he can't afford the costly litigation, whereas the person who has cheated or who has done something wrong is already sitting on a piles of cash of the ill-gotten money. So he can afford the best legal system. So legal system today is available only to the rich or powerful, not to the poor. The second thing is this, I would request that SAT should not look at organization like SEBI as a litigant. The litigant is the face behind SEBI, which are the helpless investors who have suffered because of some act. So SAT got to start looking at it differently. That is the first thing about the judicial system. The second thing is this, that punishment, don't do punishment to minor thing. Give exemplary punishment, which should be setting as a benchmark and deterrent for any bad thing happening. The other thing is that auditor. Now, there are 2 points today. That auditors are supposed to give the picture, which is like a true mirror should give picture. But today, many complaints are there that the picture that auditor presents is either the opaque, or it is bloated, or it is non-transparent. So I would say the auditor has to be the first and foremost gatekeeper of governance. And we all see the complaint that Big Four are dominating. The question nobody asks is why Big Four are dominating? Why can't we take up a challenge that we are going to create an audit organization in the country which is as reputed, as efficient, and as capable as any Big Four? So auditors should take an onus on themselves to improve and give a audit profession a good name, and Indian audit firm should going forward become as good as Big Four. The third point that I want to make is on independent directors. We have seen a lot of legislation on independent director, a lot of legislation everywhere, but ground level situation or real situation has not improved much. And it is not going to improve much because independence of independent director is a character, it is a personal trait, it cannot be legislated by any legislation. But what I suggest is this: we can have a situation where we adopt a video camera approach. As you see on the traffic light, if the video camera is there, not much people violate the traffic light. So SEBI or other organizations should say that wherever they find any problem with the independent director or the decision of the board, they can always call those board members or many other board members for an informal chat and tell that we have watched you, we have seen you, but we are not doing anything, but we know what you have done. The other thing could be that whenever a regulatory action, not minor, whenever a major regulatory action is taken, names of independent directors should be prominently displayed so that people know that these are the people who are behind the miseries which have been caused to the investor. I think I will stop here. I will not take more time. Thank you.
Thank you, sir. Thank you very much. You have given 3 suggestions. This is very good. Now I come to the another proxy advisor founder, Mr. Amit Tandon. Please, sir. Sir, you have to unmute yourself.
Thank you very much, Pawan. I'd join all the others who've spoken before me and congratulate you on the event. Only you could have pulled off something of this order of magnitude. I'm going to kind of quickly jump into these suggestions. Now, before I do that, I just want to point out one thing, that since we are a relatively young industry, and since we've started, we've at IIS looked at close to 50,000 resolutions, 48,000, over 48,000 resolutions. We've looked at 9,000 shareholder meetings. And then when I add what InGovern would have done and what Mr. Gupta's firm would have done, it would have been over 1 lakh resolutions. So we have a very good pulse of what is happening in the market. So you have to take it from this perspective, these suggestions. So I'm going to make a few suggestions, and after that, my colleague who's also here on the panel, who you very kindly invited, will kind of take it forward from here. And since she's got the...
Sir, you have to unmute yourself, Amitji.
So we have to take her very seriously on that basis. So let me kind of very quickly jump to our suggestions. The first is, my sense is that we need less regulations, but improved enforceability. Now, on the enforceability, there's very little which you and I can do. It's something for the regulators to kind of decide how they want to act on it. But on the fact of less regulations, I think all of us can have a contribution. And I would make a suggestion that, you've had a series of webinars during the pandemic in terms of looking at regulations and interpreting regulations. Maybe every once a month, you should pick up certain areas and have a webinar in terms of with all the practitioners in terms of which regulation is redundant or not needed or their contradictions, and therefore they need to be scrapped, and you could write to the regulator. So this is something which will go down very well, and it's something which will be a great help to all of us in the market. The second suggestion is with regard to everyone's spoken about regulations and the fact that there are courts and the judiciary and the fact that there are lots of pending court cases. If we kind of get to the bottom of it, I think while there are a lot of issues, one thing which is very important is capacity building, particularly with the judiciary, with all the regulators. The way we think in industry is quite different from the way the regulators think. And therefore, I think there should be this exchange of ideas. Most regulators are reluctant to come and speak at seminars, attend seminars. So again, the initiative you've taken is great, but I think you have to ensure that and work towards, all of us actually have to work towards capacity building with the regulators and judiciary. The third fact I want to focus is, it's all very well to say, look, it's the government which needs to do something. I want to turn to one area which Sailesh Bhai mentioned when he spoke, which is that there's a role and responsibility of corporations as well. And I think a great area for them to start focusing on is ESG. I remember a quote which I had heard some time back, and I've kind of taken it to heart, that we don't inherit the planet from our parents, we borrow it from our children. So if companies kind of take this message to heart, they will start working on how is it that they can be better citizens, what is it that they can do on climate, what is it that they can do on sustainability. This is going to be very important. And here I'd just like to say something which a friend of mine, Professor Bhattacharya from the US, says. You know, he kind of says the small companies say this is not my problem, it's the problem of the larger companies. The larger companies say it's not our problem, it's the problem of the government. The government says it's not our problem, it's the problem of the more developed countries. I think the planet is everyone's problem, sustainability is everyone's problem, and therefore it will be good for companies to focus on it. Finally, there's the responsibility of the regulators, there's the responsibility of corporates, there's also the responsibility which or reform which investors have to do. Investors have a chalta hai attitude, and many occasions they say, "Theek hai, dekha jayega." I've only got 1% holding, the promoter holds a lot. I think investors also need to be more vocal about what they believe in, what they think are good practices, so that what they will do by that is push companies to adopt better practices, better processes, do the right thing. What that will do is it's going to increase the size of the pie, which can then be divided between others, rather than shrink the size of the pie, which bad governance and bad decisions do, and therefore there's less to go around. So I'm going to stop short here, and I'm going to once more thank you for this opportunity and hand the microphone back to you, Pawan. Thank you.
Thank you, Amit Bhai, for giving good suggestions. Now I come to the Shriram. He is the founder and MD of InGovern. Shriram, what are your points other than what Mr. J.N. Gupta and Mr. Amit Tandon has told? You have to unmute, sir.
Sure. Yeah. Good afternoon, everyone. Thank you for the opportunity, Pawanji, and compliments on this event itself. As Amit has just now addressed, the proxy advisory industry itself is about 10, 11 years old now. And the three of us as proxy advisors have made a number of observations over the last 10 years. If India is to be a $5 trillion economy, okay, imagine the amount of capital that would be needed, incremental capital that would be needed to take it to 5 trillion. And the markup that would be created, because today's world, the markup to GDP is more than 1. So from that perspective, there will be incremental wealth of at least 2.5 billion, trillion, which will be created from here. And so the amount of capital that is required requires all market participants to come together to work towards it. And that requires clean, transparent corporations. And as Amit referred, there is effort on all the elements to make this happen, right? And our observations are companies are able to attract capital that are transparent in their dealings and interactions with stakeholders, where the companies treat all stakeholders equitably. Usually we find that the less governed, badly governed companies actually only favor the promoters or one set of stakeholders. And we have seen this lead to failures of companies, or where cash is unnecessarily taken by the promoters at the cost of the minority shareholders. The third point is wealth creation should not just facilitate now, previously it was shareholders, now wealth creation should also benefit the other stakeholders in the system. And so companies should be sustainable and profitable and should also be socially responsible. And this, I think, previously some companies over a number of years, in fact, globally, there are companies which are 300 years old in existence. They are that sustainable. Can we create such corporations in India which are 300 years old and contribute to this $5 trillion economy? And simplicity is what I would think makes for such a sustainable organization or enterprise. So giving all this, I think it is the role of each of us to follow these 4 principles and contribute to this economy. And that, I think, is the essence of good corporate governance. Thank you.
Thank you, Mr. Subramanian. Thank you very much for giving the suggestion. So we have now 9 suggestions. Now, Hetal, over to you. So briefly, you just please tell.
Thank you. I'm always happy to have the last word. I think in addition to what everybody's sort of been talking about, an important part of developing a stronger economy is for the government to itself to get its act together. So today, when you look at the governance standards of public sector enterprises, especially those which are listed, there are several instances where public sector enterprises are in violation of regulatory regulations itself. You have political appointees on boards, which is a practice we don't like. And again, I'm not necessarily disparaging the existing government. We've seen this across the years. You get whichever government that you look at, the degrees are different, but you basically see it across. And I think this whole twin agenda of having the national policy agenda as well as trying to be profitable because it's effectively a listed entity and it has to generate shareholder returns. I think these tend to be in contradiction on several instances. So I think the first piece is for the governance standards of public sector enterprises to actually become stronger, better. They need to be set as an example. Today, the government has exceptions to almost every rule that it creates. Some of them are embedded into the regulation and some of them are simply just not enforced. So to that extent, I think that needs to change. The second piece I would talk about to build more resilient organizations is stronger risk management practices. The COVID crisis has clearly demonstrated the fact that risk can be unforeseen. It's tested everybody's, BPM and disaster recovery mechanism, which is fine. But it's also tested the agility of companies. Are you able to, navigate a current crisis, change your business model, see whether you can move? For a lot of businesses, they had to move very rapidly online. Automakers had to shift to making ventilators. So a lot of these things in terms of having flexibility, being able to understand what are the potential risks and how do you create that organization which is resilient is certainly an issue that needs to be looked at. Most importantly, that in what's become a forefront of an issue now is technology. The banking sector, financial services, more importantly, this was always critical, right? Because a lot of transactions happen through technology platforms. But more so, even for manufacturing now, what is the kind of technology depth that you have? What is the kind of security systems that you have? Do you have a strategy around it? And is the board capable of actually monitoring some of this? So, having a proper, strong digital governance itself in organizations, banks and non-banks for that matter now becomes an important aspect of building a resilient corporate India. And third, I'll make it sure that the last point is just taking off from what Amit talked about, the fact that, while there is a lot of that companies need to focus on ESG, there's one thing to say that has been bandied about. You have a whole great sustainability report, you have GRI reporting, publish fancy annual reports. It finally gets down to who's responsible for some of these activities. What is your governance around these ESG assessments? So do you have someone at the executive level who's, variable pay or has a performance target which is linked to deliverables on the ESG platform? That is essentially how it will get driven through the system. Today, when we look at companies and we talk to companies, in several instances, we find that there is this whole, operation which is generating profits and there's a focus. There is a separate vertical which is actually, looking at sustainability. The enmeshing of both and ensuring that the two of them work together really happens when you have at the leadership level that responsibility being set. So one is ensuring that ESG targets are built into executive remuneration and of course, ensuring that executive remuneration is aligned to company performance. I think in the COVID crisis, we've seen a lot of the leaders, announce pay cuts for themselves, definitely for people down the ranks, depending upon hierarchy as well. But having said that, there are enough number of instances that we see where you have, a certain board pay increasing at a point in time where the company has actually let go of employees. So there has to be a moral compass that has to be built in, and some of these issues also need to be addressed in terms of alignment of executive compensation to performance, as well as more broader non-financial parameters. I would close with that. Congratulations, Pawan, on this on your entire effort and the 50th event that you have today.
Thank you, Hetal. Thank you very much. Now, because governance issue is there, so I will just take now I request to all, because time is really short and we have overshoot. So please confine to directly to the point. What are the important things? So Naval, just share your point on corporate fraud within 2 minutes.
Thank you. Thank you, Pawan, for this opportunity, and congratulations to you and your entire team for putting this up and for your new book and your app. As suggested, I'll come straight to the point. Here, the theme we are talking about is Nirbhar Bharat. And we already had speakers talking about investor confidence, ease of doing business, and sustainability. They all have direct correlation with corporate frauds, because ultimately the frauds and the corruption, they are the biggest roadblocks into any kind of efficiency or sustainability efforts that one would like to have. Now, having said that, I would like to limit my deliberation only on the frauds which are applicable to the public as a whole, or which impact the public interest, because here we are talking about Nirbhar Bharat. Frauds can be of many dimensions. So of course, I'll not go into those things. The first suggestion I have is relating to how do we detect the fraud early, because all the global studies, including ACFE and other surveys, if you see, they all talk about early detection leads to less and less losses. So how do we detect corporate frauds early? I have a suggestion that in Indian Companies Act, at least, we do not have a reward for the informers to the regulators. We do have some kind of reward system within income tax and indirect taxes also, but on lines with what is being done in US and other developed nations, we could also consider having a reward for any informer who reports a corporate governance related issue or a corporate governance related fraud. Now the second suggestion related to this is how to protect them. So of course, related protection have to be there, but I would also suggest that the data protection bill, which has been brought by government in 2019, this is the right time to get it issued by due deliberations. Of course, I'm not getting into detail of that, but this is the right time to get that introduced to secure the privacy of the data. And thirdly, the timeliness of action. So especially if we see in public sector banks and public sector undertakings, there we have a very robust system of vigilance. We have vigilance officers. They're all working under Vigilance Commission. But if you see practically, the timeliness of conclusion of any case or any complaint may not happen. So, I have also been discussing with some of our board of director roundtables where we come to know that a person is retiring and at that time it is being concluded, the case is being concluded. So can we put some time frame to it so that especially in the bank side, when something is related to, giving out of a loan, etc., how we can make sure that accountability is fixed within a specific time frame. So what I'm talking about is how to reward the informer, how to protect the informer, and how to speed up or make sure that we have the investigation done. Last but not the least, Mr. J.N. Gupta made very interesting points relating to auditors and independent directors. My only submission is that in the future, I personally see that instead of just holding some people accountable, that, okay, these are the independent directors, these are the auditors, they were supposed to check. We need to look forward to technological solutions. There is a concept called HIPPO, which says highest paid person's opinion in the board. So rather than that kind of concept in board governance, we need to look at whether the board is making informed decisions based on data, based on information. So I think that will be the future going forward, and we need to look out for the ways how we evaluate the corporate governance index of a particular company, looking at the level of technology that it uses for decision making. That's all from my side, Pawan. Once again, thank you very much.
Okay, thank you, Naval. Thank you. Now, next session is IBC Madan and Yogesh, and you have to finish within two minutes. Here, I'm giving. So because I can take liberty from you, Madan. So you start your suggestion directly.
Thank you, Pawan. I'm really proud of you, and my compliments to entire team of corporate professionals led by you. Coming to my topic as insolvency and bankruptcy law, as all of us are aware that it's a 4.5 years old legislation. And on the success of this law, there are two schools of thoughts. One says this law is successful, another this law is a failure. I belong to the first school, subject to certain riders. Even in Swiss Ribbons case, Supreme Court said that the experiment of insolvency and bankruptcy law is largely successful. Supreme Court also said it's an experiment. The emphasis of this entire law has been speed only. But the speed has come to a halt because of certain reasons, and we have to do some rectification. No doubt the speed has come to a halt because of COVID also. But one of the major reasons is our own adjudicating authority. In the law, the time which has been given for CIRP period is 180 days or 270 days or 330 days as the case may be. But in many of cases, we have seen that adjudicating authority is taking more time than the entire COC and the resolution professional has taken. So we need to take some dramatic step towards that. And government is aware of this, government is seized of this issue. In NCLT, we are not having adequate sufficient number of members, even the infrastructure is also lacking there. On 31st of May, Supreme Court has given an order to Ministry of Corporate Affairs to fill all the vacant seats, which are more than 50%. Fill all the vacancies within a span of next 2 months. But I don't know whether in the 2 months, Ministry of Corporate Affairs would be able to fill all those vacancies or not. Another recommendation I would like to give is that reason is that delay in decision making at the COC level by the financial creditors, particularly banks and financial institutions. Though there is circular from IBBI that they should come there with complete authority, but in many of cases we have seen they are not taking any decision then and there at the COC. Then there are hiccups from the promoters of the company. They are not allowing the resolution professional to work. They are not allowing COC to work. Some provisions, stringent provisions need to be there to check this intervention and interference of the promoters. Another issue, according to me, is independence of insolvency professionals. An insolvency professional in the entire process has become a punching bag. Everybody comes and punches him. Everybody comes and pressurizes him. And then there is a provision in the law that COC can replace a resolution professional at any point of time without assigning any reason. That is really impacting his independence. I need some amendment is required to be there in section 27 of the code. Then the provision is regarding immunity to insolvency professional. Though section 233 is there, providing him immunity. You do whatever within the boundaries of law, and you shall be given immunity. As Mr. Damodaran said in the beginning, that section 149, immunity to independent directors, is no immunity. Similarly, here the immunity given under section 233 to IPs is no immunity, because the moment he deviates, there is a disciplinary action against him by either the Insolvency Professional Agency or by Insolvency Bankruptcy Board of India. I think insolvency professionals need hand-holding by IBBI as well as by IPs. Last two suggestions and very quick suggestions, that section 29A, I am against the blanket applicability of this particular section. If a company corporate debtor has gone into trouble because of the market conditions, because of the reasons beyond the control of the management, and now the management is willing to revive this company, management should be given a chance to revive the company. 29 should not be made applicable there. And last but not the least, my last suggestion on PPIRP, pre-package. Here in this pre-package insolvency resolution process, what has been done, that a MSME company has been made a corporate debtor. According to me, MSME company should have been made an operational creditor. that if a bigger company commits a default with MSME company and a default amount is 10 lakhs and above, then MSME company can file an application under Section 9 against that bigger company. But here what we are talking about, we are talking about insolvency of MSME companies. It should have been vice versa if the government actually really wants to have the MSME sector. And this Swamiji, the list is very long. I can go on. I can have 100 different suggestions, but the time is short. I will confine here only. Thank you very much. Thanks for giving this opportunity.
Okay, thank you, Mr. Madan. Now there is one message has come. Vivek, you have to wait. SEBI office is sanitizing, so they are just. Pradeep Ramakrishnan wants to speak 2 minutes because he has to vacate his office. So I'll request Pradeep just to tell your points and then you can move.
Thank you so much, Pawan and CP, for inviting me. And I know I'm speaking a couple of minutes because every single speaker has spoken something which SEBI has, has a viewpoint over. So we are living in very strange times because the pandemic has actually altered the economic landscape and even globally the volatility of the capital markets. So, and if you see, there was a very interesting study by OECD which has said that around the world, around 44% of the households have at least lost one person, I mean, in either the job or the person itself whose work has been disrupted. So that's a very poignant thing for us to ponder over. So what has SEBI done? SEBI has been pretty responsive during this crisis because the whole concept of an Aatma Nirbhar thing is what can you do to sustain yourself? If you look at SEBI, we have a preamble where we have said that we need to protect investors, we need to regulate the market, we need to develop the market. I want to give you just 2 instances what we have done. And I'm telling you these because I've been involved in these 2. So last year, just when the pandemic, we all thought was going away in September 2020, we brought in certain relaxations for companies. We changed certain portions of the LODR. The certain strength was also brought for investor protection, but we also gave a lot of relaxations to companies. Apart from the COVID relaxations, we brought in certain permanent relaxations also. Similarly, recently, if you see, last month we had brought in certain things for debt-listed companies. You see, when during the pandemic, we even brought certain things for the transactions in defaulted debt securities. As far as SEBI is concerned, now we are even concentrating on debt-listed companies. The new NCS regulations will be discussed now, and then we had brought in a consultation paper where we had divided it into different parts. One was for the purpose of investor protection, for the purpose of corporate governance, and for the purpose of for the purpose of ease of doing business. So I hope these measures will go in some way in helping the corporate as well as ensuring that investors, because we are like, for example, one of the measures is reducing the afresh prospectus to 10 pages. So we hope it even engages the investors to that extent. So I'm not going to continue anymore because I know everyone has got a 2-minute limit. So thank you so much for inviting me on this program, and I wish this good success. Thanks.
Okay, thank you, Pradeep. Thank you. Now, Deepthi, everybody has to come to the point directly. Okay, so what are your suggestions? Deepthi, please.
Yeah, thanks, Pawan, and congratulations to corporate professional. As regards IBC, yes, it has given boost to the ranking of India, but to maintain that, I think it should not lead us to go back again down in our ranking because of that IBC which given us boost. So one of the important point, yes, my friend Madan has already mentioned judiciary reform and involving technicality. That is the main core for any country to be in that ranking and be Atmanirbhar. Judiciary is the core of any country. So that is required. Technology to be used for the same to a great extent, though little bit started compulsorily. Also, I have one suggestion of using technology further is that common platform there should be where all the information of the company which is under insolvency and which are inviting the bids for the resolution and also the assets which are available for sale, that should be available at one platform which is available to all, anywhere it is accessible in entire world, any corner, and it should be marketed. Then there will be a lot more investment in stress asset in India from a strategic investor or a businessman also. Further also, I think we require to now decide on cross-border insolvency in view of UNICITRAL or Also group insolvency, because now we are reaching that the cases are coming, we should clarify that and should do that. Further also, I think that Section 10 application, that application from corporate debtors should be viewed as openly, that it is for the reason that revival of the corporate, this application is required, and it should be viewed as such, not as intended to, run away from any liability. These are the some suggestions, and also little bit comment on Section 29. Madan has already done. I agree with him. So we are on the same view. Thanks. Thanks, Atal.
Thank you, Deepti. Now, Yogesh, what is your point? Directly to the point.
Thanks, Pawan, for inviting to this Golden Jubilee seminar. And as already said, IBC by far, according to me, is one of the most pragmatic law for bringing the financial discipline amongst the corporates, and also finding out the resolutions for the going concerns, or at least demonetizing the assets struck for years in the legal process and making them available for further use. However, as already stated by Mr. Madan, that the very purpose of coming out with the IBC was the time-bound resolution process, which has not been happening, and it has created a lot of frustration amongst all these stakeholders. So there is an urgent need to do something about the judicial structure and the other infrastructure to deal with the cases. Now, as far as the other reforms which are required, is that the IBC has already containing the law relating to the personal insolvency, which has not seen the light of the day due to the, due to the inadequate infrastructure. So it has already been 4 years, and we do not know when it is going to see the light of the day. So therefore, it is very, very urgent to, again, coming back to the same point, that in order to bring the personal insolvency law, they have to strengthen the infrastructure first, which is not even adequate to currently handle the current cases. So we need to do something into that. Then apart from that, this liquidation process, you see, we are, our main purpose in the whole of IBC is to maximization of value. Now, under the liquidation process, there is one problem which I have been seeing practically, is that the bidding process, you have been given the 90 days time only for the payment of the entire payment, which is very, very difficult for any large ticket size projects. If it is good for very small projects for, say, 10 crores, 5 crores, but it is not sufficient for large scale projects. So there should be some structure to be made for making some arrangement for some deferred payments over a period of 2 years or 3 years, as has been happening in the case of CIRP. Then there is another issue, is that the very hot issue is the CIRP cost and its payments. Most of the IPs are struggling for their payments. There is no law where we can force the COC to make the timely payment of the CIRP cost, which is sometimes frustrating the insolvency professionals, and they're not able to carry out the due diligence, and they are not being able to pay the other professionals in time, and they have been getting a lot of reminders. So some reminders, some check in the regulations, something is required to be done in the regulations so that the payments can be made in time. There must be some sort of reserves which should be created in the beginning of the CIRP process, so that this problem is over. Then third issue is that the default limit, which was initially only 1 lakh rupees, has been increased to 1 crore rupees in March 2021. Sorry, March 20. I think it has been done without application of mind, because straightway increasing from 1 lakh rupees to 1 crore is basically killing the entire IBC process. Most of the creditors are falling below the 1 crore limit. And in fact, it has been told that it has been done to benefit the MSMEs. It has been the other way around, that it has been detrimental to the interests of the MSMEs. So therefore, this limit should be brought back to say around 10 to 25 lakhs, so that, because in any case, most of the MSMEs outstandings are ranging between 10 to 50 lakhs. Therefore, this is against the interest of the MSMEs, which are the backbone of the country. Therefore, this limits needs to be reconsidered and to be brought down from 1 crore to 10 to 25 lakhs. I think these are the major concerns which have already been, there are a lot of other issues, but due to the time constraints, I will not be able to take up further time on this issue. Thank you very much.
Thank you. Some of the requests has come, some speakers have some issues. So I will postpone some time. So I will try to commit. Now I'll go to the this capital market reform. Girish Joshi ji, please.
Good evening. Good evening. Thank you, Pawan ji. Thank you, corporate professional team. I'll quickly come to the points. Capital market reform. When we talk about the capital market, is a marketplace where investors comes and trade, and it is a place where even companies also raise money, and it is for a nation building as Aatma Nirbhar Bharat. So, and the capital market, one is KYC. There should be single KYC and unified KYC. So investors who are, whether they are going through the banking channel, insurance channel, depositories, bond market, only one KYC should be there for across all these finance services division or even mutual fund. So one single KYC, unified KYC is a very important thing. So easy access for the investor to provide money or to deploy his or saving. Second is a marketplace. Marketplace where even currently equities and bonds are being traded, but government securities, very important. Government securities, treasury, SDL loans. These should be traded very robustly on the stock exchange and even primary market distribution. Even money can also be raised through the stock exchange platform because so many companies are coming with the IPO and raising billions of rupees or dollars. So why can't government borrowing can also happen through the stock exchange platform? So we have the all infrastructure available, and it is all investor can participate. So this is another thing. Same thing for corporate bond also. Now, when we are talking about, I talk about cash market, we will talk about derivatives also. We have very healthy equity derivatives market, and Sri Ashok Agarwal also referred about the currency derivatives where market is outside India. So entire currency derivatives market and rupee derivatives should at least happen on the exchange traded platform. So all investors are accessing because something is on the OTC platform, something is on different platform. Currency credit default swap. This market should also be brought on the exchange platform as early as possible. Now commodities, Sri Ashok ji already touched upon. So I just want to bring that interoperability should also be applied to commodities derivatives market, and the way equity spot market and equity derivative market are also on the same screen. Equity spot, commodity spot and commodity derivatives market should also be provided on a single platform. So all farmers, distributors, producers, they can hedge their commodity risk very conveniently. Now issuers, because the capital market also provides money to the companies to raise money. So thanks to SEBI, so many new innovative products have been introduced recently, like REITs, InvITs, even securitized debt also getting listed. So we should have simplified disclosure norms for such more new innovative products, and it should be more accessible to retail investors. Now, coming to the Aatma Nirbhar Bharat, where we need to have proper infrastructure. And now looking at the COVID, health infrastructure has become very important, and which we have to scale up and build upon. Now, municipalities are important bodies which are going to create this health infrastructure, even various state level agencies. So these entities are going to raise a lot of money for infrastructure projects. So the private placement market rules which are there currently for these entities to raise money, and to those rules to be tweaked or revisited. That is, I think SEBI is already working on that. So I think we hope to see some new things on this line. Third is fungibility, reverse fungibility. We have fungibility where you can, when there is sponsor ADR program is there, you can tender your shares and company gives ADR to and get listed on New York or US market. Same way, many companies have listed their equities in the overseas market. If they want to offer the same some of the shares to the domestic investors, then we should allow some reverse fungibility, which will give a lot of liquidity because Indian market is more highly advanced in terms of settlement, risk management, everything. So that will bring a lot of new price discovery. We will also become price maker down the line. Now, ESG has been spoken by many speakers before me. Mr. Hari Bhakti sir also nicely said, even Dhaneshwar Singh sir also said. But I want to bring one more aspect. Apart from the disclosure, our investor, domestic investors who are putting money and who are putting our savings mutual funds or other, they should also consider ESG as a very important aspects when they invest into our fund, deploy the funds, and that disclosure should come regularly. How much AUM they have done deployed using ESG parameter. If such disclosures come regularly on the public domain, the automatic pressure is built upon them, and ESG framework, which all previous speakers have dwelt upon, it will, I think, will get proper lift also. I will close now here. Thank you very much.
Arun, he's a founder of Cap Grow. Arun, please tell your point of view in a very crispy manner.
Yes, first of all, congrats to the whole corporate professional team for organizing this series of webinars. They have been very useful and insightful. I will quickly come to the point. I think some of my key recommendations are, as spoken by previous speakers, NCLT has been one of the key game changers in the equity capital markets. What I would like to see going forward is the debt markets. There should be a lot of reforms which should deepen the debt markets. As it happens in the US, we want to see a lot of securities across the capital structure being issued to various kinds of investors. So if a company is going to an NCLT, we could probably have preference shares, senior debt, subordinated debt, and that should be easily traded in the market so that we have all kinds of investors who are actively participating in these NCLT activities and bankruptcy proceedings. Second is shareholder activism. I think we have seen this enough in the US, and my sense is that this leads to efficiency in the capital markets. We have not seen this kind of shareholder activism in India. So as a result, a lot of managements are, I would say, not concerned about the minority shareholders and not even to the institutional shareholders. And institutional shareholders just keep on sitting on their positions, and if the managements do not act in the right way, they just sell it in the market. What I would like to see is shareholders as a group acting against the management and in favor of the minority shareholder to bring efficiency in the company and as a result in the capital market.
I think
we have done enough. I would still like to see more ease of doing business. I think that will help all of us to take these capital markets to a much higher level. Thank you, and once again, congrats to the corporate professional team.
Okay, thank you, Mr. Lalit Dua.
Well, you have to excuse me for the video because I think the program has gone way beyond its schedule, but I will not take much of a time because most of the points that I wanted to speak have already been spoken by the earlier speakers. But I would like to congratulate the corporate professionals teams for taking a good initiative to conduct webinar on the current topics. I am in awe of your expertise, skills, and knowledge, which have been truly reflected in the successive webinars organized by you. The speakers have already provided a lot of insights of plethora of laws applicable to various segments of industries. It is really heartening to see that each webinar has already witnessed a large number of attendees. I wish corporate professionals the best of luck and all the success in their future webinars. I would also like to speak on a particular point which has not been spoken by my various precedents in terms of speaking. You know, in the case of buyback, the buyback tax is now being paid by the companies, and the recipients, the sellers, their proceeds are tax-free. So this is under the new provisions of the Income Tax Act 115 QA of the Income Tax Act 1961. But under the buyback, where the companies are doing the buybacks under the open market mechanism, the NSE and the BSE, they were under a structural reform by the SEBI. They were supposed to inform the seller brokers through an email and through an SMS and through a separated contract note that these were the trades which were buyback with the buyback buying broker. But unfortunately, I have seen that while the structural reforms were very welcome, a very good initiative by the SEBI, but I don't think that it has been practically implemented on ground by the exchanges, particularly the National Stock Exchange. So it would be really heartening from SEBI if they can genuinely implement the reforms that they have done for the buyback mechanism for the companies that have been doing the buyback through the open market mechanism, so that the sellers who have sold their shares, and in those cases where the trades have been matched with the buying broker on behalf of the buying companies, then the selling clients can claim tax-free income. So this is in a nutshell my suggestion. The structural reforms is very welcome initiative by the SEBI, but I don't think the practical implementation has taken place on the ground. Thank you very much.
Okay, thank you, Lalitji. Now, Arvind Mathurji, he's the private equity pro partners. Sir, briefly, what are your quick suggestions on AIF? Sir, you have to unmute yourself.
Thank you so much, Pavanji. My quick suggestions are three. One relates to PFRDA, another to MCA, and one to IRDA. So, and these are in relation to AIFs, Alternative Investment Funds. So the alternative investment fund industry is not fully developed in India, and 90% or 80% of the capital comes from overseas. Aatma Nirbhar requires that we grow our own economy and our own sources of capital. Of course, we must welcome international capital, but we also need to grow domestic capital. So there are three constraints that I have identified. Not only I, a lot of other people have also identified, and these are already in the public domain, but they have not been acted upon till date. And I think the COVID-19 pandemic is the right time to activate these reforms. Number one, PFRDA has a policy to attract NPS, pension capital, by a system where they have told the pensioner that we have two schemes. One is active and another is, auto. They have included AIFs only in the active category and not in the auto category. So my humble request to PFRDA is to ASAP include AIFs in the auto category. That's number one. Number two is insurance companies. Around the world, both pension funds and insurance companies are the biggest providers of capital to AIFs, private equity, and venture capital. Now, IRDA has done a lot of good reforms in that regard, but there's one small technical point, is that if an AIF invests overseas, of course, not more than 25% can be invested overseas by SEBI-registered AIF, but then it becomes ineligible for an insurance company, and there is a complicated process to allow that. So IRDA needs to clarify this, and it really doesn't matter if an AIF is investing a small portion abroad, and this reform must be done ASAP by IRDA. It's pending for a long time. The final recommendation I have is for MCA to kindly institute another reform that has already been suggested to them many years ago, which is CSR. CSR should be allowed to be invested, a small part of it, maybe 10% of a company's CSR, if the company so wishes, should be allowed to be invested in AIFs, which do social impact investing. For example, during the pandemic, we saw such a huge shortage of healthcare facilities in India. So an impact fund, an impact AIF, invests in these kind of avenues, healthcare, education for low-income people. And why should not it be allowed? It's already been recommended by various committees. So my request is for MCA to execute it ASAP. Thank you very much, Pavanji.
Thank you very much for be brief. Now I have one request. The we have overshoot the time. So is it possible that some of the session, because 2 sessions I have labor law and the company law, we have postponed for the next week, because public will not stay up to that time. So can I request that some of the session we can postpone for the next week, same time? And our next speaker, Atim Kavra, has joined from Singapore. So I'll just request him. In the meantime, you just send me message that what is your plan. So accordingly, I can structure some of the session for the next week. And please send a WhatsApp message. Atim.
Yeah, hi.
He is a person is frontline strategy and Singapore, coming from Singapore, and he has some suggestion for the defense sector. Yeah, Atim, please.
Yeah, hi. This is Atim Kabra from Frontline Strategy Funds, and I'll very briefly touch upon the self-reliant India and Nirbhar theme, which has been spelled out, and I'll call it a game changer for the country. As you are aware, any significant policy change from the established practices of more than 6 to 7 decades requires a steadfastness which will be examined by the various stakeholders for an extended period of time to confirm for themselves that the policy changes are here for good and they're here to stay. I am glad that the government chose the mega defense sector and over a period of 7 years has demonstrated its firm resolve to change the old ways of doing defense deals in favor of indigenization and has brought about a policy clarity. In our opinion, it is estimated that the 2 lists which have been released by the government for defense systems and products to be made in India will possibly result in multi-trillion rupees worth of business over a period of time, which will serve to deepen the domestic manufacturing sector at substantially higher margins than merely assembling imported kits for offset/defense business, which used to be a significant part of the defense companies. The first and the second lists, which have been released, clearly specify up to a period of December 2025 systems which have to be manufactured within the country with increased indigenization levels. We are already seeing substantial interest from overseas manufacturers who have understood the firm resolve as exhibited in the policy and are exploring ways to participate in the new regime of doing defense business in India. So we are expecting, in a nutshell, to see more manufacturing facilities being set up in the country, new joint ventures being established with domestic players, and this will result in deepening the technological backbone which is required for sophisticated systems to be made in India, will save us precious foreign exchange, deepen our industrial base, while embracing a technological prowess and over time enhancing exports, which will earn us valuable foreign currency also. So this is a sector where the government, through its consistent policies, has delivered significantly on its dream of Atmanirbhar Bharat. Thanks.
Okay, thank you, Atim, for giving this wonderful thing. Now, because I asked this, because time is overshooting, and we have to do our valedictory session also. So I've received suggestions that can we shift the entire program which is left out for the next week. So I have received some point. So my request to all of you, because it's a wonderful session, and no doubt in the short period it was too difficult to do this. So what I'm doing, I'm postponing the remaining portion and I'm finishing the validity session, because 2 speakers, Ashish Chauhan and Sudarshan sir is there. So the same session, remaining portion, we can do next week, because public is also asking, and 3 hours is there. My total apology that we were not in a position to complete this. So next week, the remaining portion we'll start 4 to 6, and the other portion directly will start from this. So my apology to you, and I will request now Mr. Ashish Chauhan to share his point. First, Ashish Chauhan will speak because he's there. Ashish sir.
Good evening, sir. It's an honor to be speaking at 50th Golden Jubilee webinar on corporate economic and labor law reforms. Can you hear me?
Yes, you can carry on.
Labor law reforms for Aatma Nirbhar Bharat. Basically, I also participated on the two earlier speakers. I think there are several issues which are very pertinent that have been pointed out and discussed by the earlier speakers. For me, there is always a kind of a balance to be maintained between ease of doing business and having right regulations. Many times when you try to do things fast or ease, the issues relating to people taking care of or people using loopholes to do various things also starts coming up. So SEBI and also exchanges as well as ministry have to kind of ensure that why the markets are required. I mean, all of us have seen that most of the modern prosperity is due to corporates. And if there were no corporates, there won't be prosperity. And large part of corporates the prosperity is also due to the public markets corporates, that is listed corporates. And there, literally people sitting in different parts of the world, a person sitting in Osaka in Japan, Houston in Texas, or sitting in Jammu or in India, or in Dibrugarh in India, they are investing in a small company coming out with an IPO, Coimbatore, where they are never going to visit, are investing that money is because there is a trust in the system. India is pretty much the only developing country with $2,000 per capita income, which is a very vibrant capital markets. And for me, the wealth of the nation that can be enhanced only if we create that trust and continue to enhance that trust. So somewhere in the line, SEBI, policymakers, parliament, they have to keep all this in mind, that how much of the leeway that is given without diluting the trust that people have created. Recently, BSE also completed 7 crore investors milestone, which means that almost 35 crore, each family having 4 or 5 members. And if you look at EPF and all put together, probably 30 to 35 crore people are already in the stock markets now, which is not a small amount. Almost 1/4 of Indian population is somewhere directly or indirectly connected to the stock market. And 1/3 of India's wealth, India's total wealth is almost $9 trillion, out of which $3 trillion is by way of the equities market listed on Indian markets. And that is basically markets for trust. And that's where whatever we suggest, whatever we do, ensure that the touchstone of doing that new regulation, changing in the regulation, should be about whether this activity is going to enhance the trust of investors or not. And that is what I just wanted all of you to be aware and appreciate. That trust part is what we all live and breathe for. And trust part is what is going to make India even more prosperous going forward, Indian stock markets more vibrant. And without that trust, if we lose, a trust is very difficult to build. It has taken 140 years to create that trust, but it's easy to dilute, it's easy to contaminate. And that's what my request to every corporate professional sitting on the investor side or on the company side or on the regulatory side is that all our efforts, because all of us are drinking out of the same pond, that is the capital markets, right? And the trust is what we have to preserve and we have to maintain and we have to enhance every day. And any one of us doing anything wrong or contaminate that pond is poison it for everyone. And so my request is, let's work on creating further more enhanced trustworthy work for capital markets, and that all our activities of ease of doing business or better regulations or higher regulations or anything else should be basically. So with that, I thank corporate professionals for inviting me and also thank all of you for being a patient listener. It has been great experience listening to my earlier speakers. And of course, we are all waiting eagerly for Mr. Sundareshan to also give us his words of wisdom. Thank you very much.
Thank you, Ashish Bhai. Thank you very much. Now I will request Mr. Sundareshan, the Executive Director, SEBI, because he has contributed a lot for PIT program and gave the knowledge to the entire corporate world. Mr. Sundareshan, please.
Thank you, Pawan. Ladies and gentlemen, I am delighted to be here before this distinguished audience. I'm thankful to Mr. Pawan and his team for inviting me to be part of this Golden Jubilee webinar as well, in addition to the various other times when I have also participated in this. I see that the theme for today's webinar revolves around reforms pertaining to diverse subjects, including corporate governance, capital market, taxation, insolvency, labor, and last but not the least, information technology. In my view, among all, technology assumes significance, which has helped all of us in smooth sailing as far as work or business is concerned since the outburst of the pandemic. Talking of reforms, in my view, Mr. Pawan and his team of corporate professionals deserves full appreciation. The main reason being that during the last 1 year, they have organized 50 webinars on different topics, which needless to say requires a lot of preparation, coordination, and efforts. That too, having brought the best speakers in the industry on this platform to share their knowledge and wisdom with other stakeholders. This endeavor, which I must say, is in itself a kind of reform, and I think they deserve full appreciation for that. This type of efforts actually demonstrate that nothing can stop us from gaining and imparting knowledge if one is determined to do so, no matter how the situation is, because organizing such events physically was next to impossible since the pandemic due to social distancing requirements. See, the knowledge gained from such events will help to better understand the industry. As Mr. Ashish said, this will also eventually help to provide feedback for bringing a slew of improvements in the policies and regulations. This will not only help the market participants to tide over the challenges, but also contribute towards building an Aatma Nirbhar Bharat, which is part of even today's program, that will propel India to the next stage of higher growth. I would like to thank all of you once again, and more particularly the team from corporate professionals, and conclude by giving two quotes. One from Peter Drucker, the father of management thinker. We all have studied his books in multiple courses. What he said is, the basic economic resource, the means of production, is no longer capital or natural resources or labor. It is and will be knowledge. Then another from Louis L'Amour, who is an American novelist. Regarding knowledge, he says, knowledge is like money. To be of value, it must circulate. I repeat, it must circulate. And in circulating, it can increase in quantity and as well as in value. So the wisdom, and all these quotes were given almost a century back. The wisdom imparted by such eminent personalities in the last century is still relevant. And that has been proven by the team of corporate professionals in the last 1 year. Once again, hats off to them. Thank you very much and stay safe.
Thank you very much. Thank you very much, sir. I will, before giving the formal things, I will request my partner R.K. Agarwal to propose a vote of thanks for today's program, and my apology to all, because this was a Herculean thing, though Mr. Sundareshan has told me that you will overshoot the time, but I think the way, because you can't tell the senior that you can cut short. So the same program which is remaining, we are shifting to next week, and we will ask all everybody's confirmation and the convenience, and we will organize, and all the session I will complete till the time it is taking place. My apology with everybody. It was a Herculean task, and I think we were not able to complete this. So I'll request our Rajkumar Agrawal ji to just give a vote of thanks to everybody.
All distinguished dignitaries, it is a matter of great satisfaction and fulfillment that when at Corporate Professional we organize this program, all the dignitaries, such high profile people who are so busy in their profession and in their occupation, they gave their consent. They came here to bless us and to express their views. It is really, I mean, hats off to all the dignitaries, and really we could not do justice with the time. And I will suggest, as Pawan has also already proposed, that reforms in different laws is a very topical subject, and we should organize now next 5-6 webinars on each topic. Maybe one on direct tax reforms, one on indirect tax reforms, where we will discuss only, I mean, the suggestions from the panelists, and after compiling those suggestions, we can prepare a paper and send to the regulatory authorities. So probably the next wave of 5-6 seminars, webinars, Pawan may be devoted for this purpose, and where I mean we will get the benefit of the views of all the experts. Really, I am very thankful to all of you that you spared so much of time, remained with all of us. Still, I mean, so many participants are there after a period time of 3 hours. It is really very satisfactory, very giving a feeling of fulfillment and proud, and it shows the kind of involvement and the kind of blessings you all shower on Corporate Professional, on Pawan, his team, and all of us. Thank you, everybody. Thank you very much.
So thank you everybody. Now R.K. Agrawal ji has given a rightful suggestion that now from Corporate Professional, like 5 series of reforms. First, we will take up these topics which are left out. We will take up one by one, and I will ask the convenience of everybody. And Mr. Hari Bhakti has also suggested, and some of the speaker has suggested, that the law, redundant law is one thing, but redundant section is also another thing, and reforms in that particular law is another part. So what we will do, continuously with the convenience of everybody, I will ask everyone, because so many people have joined at 4 o'clock and they are still coming and sitting. My again apology to all of you that because that we were not able to justice the time, but we will start the series of reforms in the country, and we will take one by one topic which we have left out, and we will do this. Thank you very much. Thank you all participants. Those who are still in large number, they are waiting for this. And my again apology. We will do this. Thank you very much to all. Thank you Ashish Bhai. Thank you Sundarshan ji. Thank you Anupam Malik ji, who has left his program and come back. Rajesh, R.K.
Pawan ji, can you please ask all the panelists who are present here if they can open their videos?
Okay.
At least we can see them.
Okay, so can you just open your video? This is Madan sir's request. And Sundarshan Sarji, I can't forget the way you have given the direction of the new PTI guy, the insider trading. Narayanan and you have done, and Savitri, they have given the wonderful things, and SEBI has come out. So thank you very much to all. Murli, Subhash Sethia ji, Amit, Balwani ji, and Shan and Malu ji. And thank you, Mr. Mark Jaila, for joining us from USA. So we will do this, Narayan. So we will do the program, and K.S. Ravichandran has come from USA, directly landed, and then he was participating. So thank you very much to all. Thank you. Thank you.
We are looking forward for the sequel.
Okay, yes, now we continue, and I will send mail today itself to America, and I'll take the suggestion from everybody. The time.
Yes. We should not also cut down the time of everyone.
सुधाकर वैसे भी इसने ना पार्टी देनी है.
No, now we will not. We will not stop. We will not stop. So,
Pavanji, only you could have done it.
Okay.
You know, only you could have pulled it off. Something like this. It is extraordinary. It's extraordinary.
Pavanji, Herculean task.
Yeah,
and really, Pavanji has very nicely arranged the same.
Whose time has been curtailed today, they'll be given another opportunity.
No. The other session will be of the now. There will be series of reforms, and that idea has come that we will not only talk about the reforms, but we'll talk about the redundant sections and other thing also. So I will send you the mail to all of you. Suggest me the time. Accordingly, we will plan and do this. So
Pavanji, one justification for reforms is the pandemic. You know, now is the time, I mean, look, we are in a pandemic, so many problems we have.
Sir, like Ministry of Corporate Affairs is making permanent for this, the video meeting, general meeting and board meeting. So this pandemic has given lots of new things. And today's efforts was because of the pandemic and because of the technology, that we could have called everybody from Chennai to Hyderabad, from USA to Bombay, everybody sitting. So that was not possible if there was no technological support. So thank you, Sudarshan sir, for your help to give us a direction. And thank you everybody. And my team of corporate professionals, those who have done, whenever we have a program, these people are doing, actually I am just presenting. These people are doing work, and they are preparing question answer issues and then sending to the speakers. And a special thanks to two persons, Mr. Agrawal, Shivam and Vivek, who has done the entire exercise of presenting and doing and technological part. So thank you, my team corporate professional also, all my partners, all my team members, and all my well-wishers. Thank you very much. Thank you.
Thank you, Pawan. Bye. Thank you. Good night.
Thank you.